Hello, hello. Big ol' sell from that absorption and highs that I just identified for you. Watching for this sell to end. Looks like it'll probably be a reoffer of our value low on both ES and NQ here. Coming back into it now, into 820 on NQ, or sorry, on ES, and watching this like 190 on NQ.
The S&P 500 now touches an intraday low after turning negative.
What's up, Allie? How you doing, man? What a beautiful reoffer on NQ based off our zone on the 32nd. Such a good lower high that was put in off of that look inside. Rotation down to our lower zone now. What's interesting is that Russell is fully divergent and it is holding previous day value high, which makes me think that we're still just rotating and this isn't going to be a further breakdown. So let's watch as we push into 820 to give us a better clue here. My concern for like a further breakdown is that I think that if Russell can maintain where it is, that this might do something like this instead, which would be the opposite of the VWAP rotation back down. So really keeping our eye on this previous day value here to see if we can sustain it as we push in, or if we're going to rotate back down to this VWAP. I think if we hold, the likelihood of us flipping is pretty high, and that would also then be a trap on NQ and ES at the end of this candle as we push down into these lows on NQ ES as Russell sustains. So just want to keep an eye on it. We know that this is in a very clear range that we're trading in on NQ and ES. The only thing that differs is that we know that there's a huge absorption into these highs that we spotted. So we're just watching to see what we do, and if we also find an absorption into these lows, right, trap, and then if we then rotate back through, doing something like, you know, like this. And we have very clear levels to be playing off of for this to make sense, right? This is our previous day value low, our previous day POC, our previous day value high. So our zones of where we're looking for price to fail is just the yesterday's value, right? We're in a very clear balanced market. And so you shouldn't be looking for like a crazy breakdown until we see a very clear shift below this or above that, right? It's balanced until proven otherwise, especially with Russell going up. So we're just watching to see how we interact here. If we find lows, if we trap and then we make a higher low, or if this candle is going to end bearish and we're going to get continuation. Unsure as of yet, but again, as where we are currently, I'm more inclined to be looking for a trap and then a rotation at least back up to previous day POC, which is our value low on today's profile. And that would, and again, like this doesn't have to go all the way back up, I just expect that we're gonna have to find some sort of absorption here and then trap, and then we could like go down like this, right? Or at least we're then just retesting our previous day POC as well as today's value low. It's the same level. So we'll watch to see if that holds as resistance, and then we rotate below our battle line and hold it as offer for the actual short. Or if, again, we trap into these lows and then pop back up and do the rotation. Unsure as of yet. ES still falling, no change. Russell sideways. But I don't think that there's a viable short here yet, if you're not already in a short. I think that this is more likely to trap than anything else in these lows until we can flip and hold, and I see someone who's offsides. Does that make sense? Do you guys have questions, or are we all on the same page? Again, I think if you're already in a short, it's not bad to look for a hold of for continuation. I am watching to see if we just get some absorption a bit higher first into a retest before we continue downwards. Because Russell's sideways, there's no sell yet. If Russell starts to follow through and gets that lower leg, then we can look for that rotation to VWAP for the low. But I think that into this low on ES, into our battle line, plus this low on NQ that we'll probably find a trap short term, and then we'll go from there. That'll give us an opportunity to either get back in or play the opposite rotation. So watch as we push down into our 813, 807 area and see if we find a low, and then if we rotate. This candle is still playing on the 15, and Russell's just coming back down to its previous bounce. Let's see if we find a bid. What's up, Jason? Subscribed yesterday, figuring out where to start on the Discord. Glad to be part of the community, finally. Welcome, brother. What aspect, what do you feel like you're missing? You just need, you want to, like, learn the system more? Are you feeling, like, a little overwhelmed? Or what do you need help with? every day I post a link in intraday ideas of, wait, my stream never popped up. Sorry guys. What the hell? Usually it automatically does it. It'll at you guys. But I don't think it did today. So there you go. If you're not already on it. But every day, for people who are in the Discord, it'll let you know when my stream starts. It starts usually around 10 o'clock, goes to around, technically it's only supposed to be 2 hours. So I was supposed to leave at 12, but I usually stay till like 2 or 3. If I'm getting, if people are like chatting, then I stay a bit longer because it's not so boring. But if not, then I leave if it's, if no one's really interacting anymore, if everyone's like dipped out. And that's posted in intraday ideas every day. And then my updates where I think the auction can go, my trades, my levels, all of that are posted in intraday ideas. And then the general chat room for futures is called 10D Shop in the Discord. All of the videos are also labeled, and they should be separated and organized into groups by what you are, whatever you're looking for. So like there's a full education, what am I trying to say? There's a full breakdown of all of our videos and lessons based off of what you think that you are struggling with, right? Like what here, like this is what I'm talking about. So like this is the Discord, and premium lesson links is a section in the Discord, and it has a general master list with all of the classes, and they're labeled by the different volume modules. But then there's also a there are links that for different sections that are all playlisted with videos. So if you have a specific thing that you have a question about, right, you'd be able to then break it down, and it's all separated into videos, and like how to access things, execution, trade reviews, volume profile, auction profile, etc., etc. But everything that I post is in these two channels for the most part. So everything is in a separate channel here, just called Intraday Ideas. And this is where I post updates, what I'm talking about. So like this was yesterday, was my pathing for the day, updates of where I think we can go, our breakdowns for as we're pushing, so 1051, 1108, 1122, 1131, right? So as we're pushing, these are all getting posted in a separate channel so that it doesn't get lost. And then I will have a stream as well, and those links will also be posted in here. So you have a understanding of what's going on, and then you also have your overall levels and newsletter for the week in overview ideas. And then all of the chatting is done in 10D Shop. So that's how the Discord works. And then all the rest of it is just the lessons in the trade review section, where discussion takes place. Does that answer your question? I just see TFC options, no futures yet. Okay. Yeah, the two channels that are futures related are the one that said in the futures section. So everything is sectioned off. There's a section called TFC options, and there's a section called TFC futures. And the main channels, like I said, are trade review, 10D Shop, which is our general chat room for futures, and then intraday ideas. Those are the three channels. again, let's watch to see if we hold into this. We're in our zones of interest. We're watching to see if we can push up here from our lows. No change yet, just following our plan, just moving things over so that it's not on top of price action so you can visualize it. This is our new 15 that just opened. Yeah, let's watch to see if we get back into previous day value here, or if this rejects and then rotates below our battle line at 124. Same thing with ES at 813. No change. NQ held our lows, rotating up to our highs now. Watching to see if we get this offer or if this is able to sustain, following our idea that we are just trading balance. If you are subscribed, Jason, I recommend that you mute the YouTube stream and join Discord. There is a little bit of a less delay on my voice. So if you want it to be a bit quicker, the news bot and my narration will be faster if you join the voice chat. And then you just mute the stream and watch the stream like that. That's what most people do. Not everyone, but it's like, you know, it's not a huge delay. I have it on the fastest possible latency I can. But there is a little, especially if you want the news to be completely live. Sometimes that can matter quite a bit. So again, we're watching to see if we hold these lows and flip back over previous day value high here at our 170. Same thing with ES here at our 813 for a higher low. Russell trying to bid above. We're watching to see if we get follow through here for rotations back up through our range. Following our idea of our two zones, right? Those are playing out. We're watching to see where we go from there. And if we then get follow through and then a rotation down, right? Or if this just gets stuck, unsure, into our POC of our previous candle. I'm gonna mark that right there. I would say if you're just starting out, it can be very overwhelming, the things that we talk about. It's you just want to take it one step at a time until you start to like really understand the process. You don't want to try to move too quickly and then you know, like not fully grasp concepts and then try to trade it. I think that can be a disservice to yourself, where you're not giving yourself the time to you know, get familiar with the verbiage, right? The vernacular, if you will, of the community, right? Every community is going to say things differently. They're gonna have different words that might be confusing, or different concepts that seem very obvious to everyone else. And you're like, what are these guys talking about, right? So you want to once you first join a community, I think, or any sort of service, or even if you're just watching the stream for free, 3 times a week, just get familiar with how I talk, right? And with what you see happen in real time, and the relationship of what you see, what I draw, right, and what actually happens, so that you have an understanding of like what your expectations should be, right? I think that is incredibly important. I think some people have a tendency to think that everything that I say needs to play out 100% of the time, and that every trade, every idea is something that should be traded with the same amount of leverage and the same amount of risk. And I think they end up in a position where they lose one trade and then they set themselves up for failure for the rest of the day because they have over leveraged on that position. And now when the opportunities happen later on in the day, they don't have the ammo, right, to actually continue to attempt. And I think that can be a big issue for people who get a little overzealous in the morning or in the afternoon on a singular idea instead of just allowing things to kind of play. So I would say that just be patient, right? Only risk what you can inside an invalidation area, right? So you want to make sure that your stops aren't too tight, right? That as long as these structures are holding, that you're able to sustain a position without, getting stressed out. You don't want to over leverage where, we're not looking for this position to be wrong until this flips below this 124 and breaks down on a hold. So if you're over leveraged and you can only risk here, a drawdown of 5 points, but the risk area that we're looking for is 40 points, right? Then you're going to be in a bad position where this then pushes to the upside, but you've been stopped out because you're over leveraged and you didn't give the trade enough room to play. So I see a lot of people do stuff like that where they feel like they are they're behind, right? Like they have to get in because they missed the perfect entry, and then they over leverage at a top edge, let's say into 170 as resistance, and they're not looking for that secondary move off the flip, but they also are unwilling to risk the lows because of where they're buying. So then they end up in this weird predicament where they're looking for the breakout, but if the breakout doesn't happen immediately, then they're offsides, and they're uncomfortable being offsides in a zone, right? And I think that is an incredibly important thing to be able to understand where you're wrong, where you're right, when it matters, right? Those things only come with time. So being familiar again with the understanding of the concepts that we're trading, the trade types we're trading, the why. I think people get a little too overzealous, like I said, where they're looking for an immediate breakout, immediate action, and then when it doesn't happen and they're over leveraged, they're then offsides and they're uncomfortable because they've taken on too much risk. And that comes with just like seeing the same setups happen on a daily basis and being familiar with the patterns and what we're looking for, right? You then are much more comfortable in these ideas and how they're going to play out and what the expectations are. But that's one of those things that only comes, after multiple sessions of seeing the same things over and over again and be like, oh yeah, this is what I'm watching. People forget that, right? Like if you can master the process and you are just trading, the mechanics, right? And we're not looking for quick money, but money that makes sense, that is disciplined, right? And follows the process and respects the areas of interest and the risk that we've set for ourselves, that the money will follow through, right? Like it's the process will carry. It's part of it. If your expectation is on the money from the get-go, I think you're in a really bad position. You're bound to lose. because you're too focused on being green always instead of the process to play out. Hopefully that you understand that. All right, what are we doing down here? Are we gonna be able to hold? Are we gonna be able to flip? I'm unsure yet. Yes is doing the thing. We held our battle line off of a look below and then a higher low, but we're still below value. We need to see what happens as we push into 18 to 22. We expect that sell side, if it was going to hold a resistance, that it would happen here into the value of this previous candle as we're pushing up. So as we come up into this, right, as our pathing suggests, we're watching to see, do they absorb here and trap, and then do we rotate down, or are we able to flip and then rotate up? Unsure as of yet. But as we come up, we'll be watching to see if sell side sits into these highs, or if we're going to get a really nice reversal and then rotation back up to the top of our range. No change. Russell still sideways between our two pivots. No push below previous day value. No push above our current day's value, right? Just moving this over so that you can see that that's what that is. We got our hold into our look below and fail area. No look below our battle line, right? We're just balanced here below value low on the day, but at previous day value low as well, right? We are currently trapped. It's not trapped. We are currently still maintaining balance. We need to get over value high, over our 170 here on NQ, and show a higher low if we're going to do anything new. Looks like we want to attempt it, right? We're holding POC to value of our previous candle. We're watching to see if we can push above for this rotation up. Same thing on ES as we push into these highs. Does this hold offer, or can we rotate? Unsure as of yet. But it looks like we will know shortly. Again, we're watching as we push into that POC there, right? Does this reject and then rotate us down? Or are we able to sustain and then rotate up? But if you have any questions, or if there's anything that doesn't make any sense, just ask. That's the one thing that I really always kind of preach, and it's something that if you've watched the stream, if you're new, right, that's something that you'll hear me say over and over again. Like, if there's any questions, concerns, anything that you don't know, right, like, speak up. That's the only way you're going to learn. And the longer that you don't ask, if you're embarrassed or if you're confused, right, and you're like, I don't want to say something wrong, right, like, that's the only way to learn is to ask, and I'll try my best to explain it when I have time, or point you in a direction, so that you can get the resources you need. No ability yet to pop over our 170. We're still just stuck here, but holding POC of previous candle. We are stuck in the value of our last 15 minute, but holding where we need. Russell still flat. Again, I don't know if we're going to be able to shift below or if we're going to be able to get back into value. It is unclear as of yet. What we do know is that there is someone taking in size into that 18 on ES, absorbing so far, until we can flip above that, as well as our 170. I don't have a higher low in yet. Like, we don't have a way for us to get back through and rotate or traverse this value. Right, like, this is our balance in between here. We're stuck at this ledge as resistance right now, and they're trying to take in. So if we can't get over this, then we'll look for that push below our 124 for that leg down. But if we're continuing to sustain here, then it's no man's land where we don't have a decision yet that's been made. If we're going to go down and we're going to be holding our value low as resistance, right, which is what's happening right now, or if we're going to be able to rotate back through to the other side. Again, this is the current range that we are trading within, is here to here, right? Same thing on ES, where we're trading here to here. So we need to shift below after making a very clear lower high, right? From here and here. If we're unable to get above, then we need to show interest below. But if we can get above, then we'll rotate back up to the other side. That is all. Yo, what's up, club? I feel like it's hard to see what I'm looking for with that white box on. I'm sorry. I don't want to lose our levels because of noise. Oh my god, that arrow is gigantic. Whoa. Okay. Under TFC futures, I only see futures basics. Is there something missing? I don't even know. I don't know what that futures basics channel is. I have no clue. I don't know if that channel exists. I don't see that myself, but I might have it hidden. It does? Okay. I might have it hidden. What's in there, Maldito? I don't mess with any of the channels, man. Oh, okay. Holy. Oh, okay. It's like a write-up. Yeah, you probably just have to go to the channel selector where it says channels and roles, and then pick the ones that you can view. Yeah, it probably needs to be updated. Bro, we still have an Apex link? Holy. And Top Step. Yeah, it is a separate thing. I don't know. He said he specifically was signed up for futures though, so. For 30-day inactivity. I don't think that's all, like Lucid, a lot of the firms do that. It's not just Apex. You have to trade, or at least have like something on, or they'll close your account. You have to like do something. Most of them have some sort of rule like that to, yeah, show that the account's still active. So don't think that that's just an Apex thing. I mean, listen, I'm an Apex hater, but know that that might happen with other firms as well. Just be careful. Most require some sort of activity. We're testing into our battle line here at 124, as well as our base at 808 on ES after failing to get above our area of interest, our 170s. Watch as we come into this low. You can see the trapped liquidity on footprint here on these highs. New 15s are opening now. I'm actually going to delete these drawings just so I can zoom in on the 15-minute charts a little bit so that you can get a better idea of where this liquidity is. This is where we're looking for a bid to try to defend. We need to see this level, this area hold, right? If we're going to sustain, and then we need to get over 170, or this is where sell side is going to try to really slam, right? Got to get above this or get below this and hold. That is the key. That's what we have drawn here. Either above and sustain and a look, or below and then rotation, right? We are going to be watching as we push into our value of our previous candle as a resistance, right? Bid, offer, step down. If it's going to go lower, if it's going to go up, we need to see it react from this low and then do this rotation to the upside. We are in a zone of interest. We are just rotating our two edges of our zone. Nothing has changed. Russell still maintaining our rotation, no change. Do not go incredibly bearish here or incredibly bullish until we flip and hold acceptance. We need to find acceptance on either edge on a retest. So far, we've just rejected our top edge. We haven't been able to make that higher low. And we haven't been able to push below either, right? We're trading between our Globex low and our current value low on the day. Very tight range in a double distribution, right? We're making a distribution here. We haven't found acceptance on either side of this this node that we've created. Same thing on ES. You need to either look below or look above. Right now we're just rotating, holding value low as resistance. So if you're short from 170, right, your first risk off would be this 125. If we can look below and hold, then you can add to that position for a continuation down. If this bid is what you're looking for, right, we're looking for a rotation above 170 and then a rotation up to 205. You are trapped in between these two levels until we see a clear sweep and then defense. We are in limbo waiting for either this to rotate down, right, or fail, trap down here, and then rotate above. Russell into the top of range here. Watching to see if sell side sweeps. I think Russell is just holding previous day value, right? So nothing really there. It's just holding value high of yesterday, isn't it? But it's inverse NQ. Yeah. Definitely. But when we actually get a good follow through, they'll move together for sure. Without it, I wouldn't be like incredibly bearish, personally. Like I say every day, like you're gonna be in a much better position when you are shorting markets that are moving together. Does this look like a pretty valid short though? Yeah, for sure. If we can get below. But like the Russell short could just be into these highs, right? That'll be the Russell short that gives NQ the catalyst and ES the catalyst. Like, and RTY doesn't need to break down fully. It just needs to reject our top of this balance that we're currently trading in, right? At 72. And then that loss of momentum then gives you your breakdown on NQ and ES if it's going to do it. Right, like if we lose momentum into these highs, then it rotates back down, which gives NQ and ES more freedom to push below. Because we don't have anything then pushing up. I would be way more comfortable with a short if we had a better, a more clear participant who is trapped down here. Right now, it just feels more like we have a seller who's been able to kind of sustain, but the buyer really hasn't tried aggressively at our top edge. I think we have a little bit of an offside trade, I guess, but I want us to come up higher first, trap, or see like a very clear look below, and then like trap here. I need some sort of like offside liquidity that actually matters, so then we have a catalyst that's lower. I just don't see that yet in this this lower auction. That has like made me think that this isn't just going to eventually, you know, exhaust sell side into these lows, and then like a bid finally is like, hey, I'm back, and then pops us, and then, you know, like traps all of these guys down here. That's my concern, is that like we're not seeing enough of a buyer at our highs that like feels, I don't know, it's like a very slow sell. That's with the divergence. A slow sell with a divergence is just like little sus. Jason, I don't mean to ignore you. I'm just want to make sure that I also am not over focusing. If you can't find it, you might just not have the role. I would submit a ticket in the Discord, and someone will help you out if you're still struggling. You might just have the wrong roles, or you might be subscribed to the wrong thing. I don't know what your situation is, but if you continue to have issues, just put in a ticket in Discord, and someone will help you. All right, what are we gonna do? Come on. I'm expecting a bounce at 100 on NQ, and then we'll look for a reoffer into 120 if we're going to go down. I do expect a little bit of a bid here as we push down, though, into previous day value into 100s, and then we'll look to see if we then hold our battle line on retest. Same thing with ES into like 808, our low. Should expect a bounce on both, and then we look to see if we hold. Russell just bouncing our lows again, which again gives us the bounce across the board. We'll look to see if they trap lower. I think that'll be the motive, and then if we're then going to rotate down, holding this. We have a trap trader at 125, 130 on NQ. They're trying to push us lower now, watching to see if we can sustain below. And what happens on retest. Again, I'm just watching this pathing. This is our secondary leg to see if we're going to be able to sustain here. I'll just mark this as a actual level so you can see that. And then we watch to see what the offer does into our battle line on retest. Russell flat, ES flat, just into our edge. We're watching to see if we look below and fail here, and then rotate back up, trapping this liquidity below our battle line, or if this is going to hold this edge at 125, right? That's kind of that's the current battle. Does 125 hold offer, or do we trap below, get back above, and then rotate above 170 for longs? These are our two edges that we're interested in, right? White box, above or below. Same thing here on ES. We held our white box high, we're at our white box low. Can we flip it, or does it maintain and do we rotate back up? Russell still flat. I think you should be uncomfortable shorting that 170, 150. I think it's like a very clear resistance, but it was too passive. Like it's clear that they were absorbing there. But the lack of motivation after we failed to get above 170, right, on like the push below, like Like the auction that took place at 150 was not what I wanted to see for a downside leg, right? Like if we had seen like a pretty aggressive seller at 150 after rejecting 170, I would have been way happier and way more comfortable shorting. But it was like incredibly just a slow drain down. And so I don't think it's worth. But like if we can see a very clear absorption into 125 here, then you don't need that leg. So let's see what they do. We're watching to see if this is a trap or if we can absorb lower. Right, we want to see the offer step down and hold this. Good trap so far. Lots of selling pressure. You can see on this candle, all red deltas, green only at the high. We need to get below 105, show interest, get below the value of our current candle, or get above our value of our current candle. So either back above 125s and bid, or below this 105 and sweep for our continuation down. We're just looking at the value edges of our current 15-minute candle on both ES and NQ. ES needs to get below that 808. Or get back above that 813. Russell continuing to be flat here. I'm gonna have to move our charts here. It's a bit off our it's a bit low. I have to adjust charts. Watching. Sorry, it's just getting a bit too low. Let me just redraw it real quick. This is an incredibly important test here, boys. This is the POC of our previous candle. If we're going to offer, it's going to be a rejection here at 809 and then a rotation low, right? Following this downside pathing idea for our previous candle. Same thing with ES here at this 105, rejecting value of our previous candle if the offer is going to sustain. Failure to do this, we're then going to be watching for a potential look back above 125. We want to see sell side defend this and then get below for continuation down. Failure to sustain, we'll be watching for a rotation back above our battle line and then up to 170s again. Right? We either are able to sustain this push below, trap liquidity here, and then rotate down, or we are going to rotate back up. ES has not been able to sustain below. We want to see sell side into this POC here. Same thing here with NQ into this. We want to see trapped buyers into these highs. And then we want to get back below. So look to see if we get a short here for this look in and then push back below. That's what you want to see if sell side is going to push down, right? A look in, a fail, and then a rotation if it's going to go down. If not, we'll look for that pop back above 125s above this POC here. This is the important level. Longs are only on the flip back above this. Until then, we're looking to see if shorts are able to absorb into this guy and then get below for continuation down. For me as well on ES, only above 813. I'm not looking to long this low. This is where we're looking for sell side to be able to take in and try to reject us. Right? We're trying to look in, fail, and then rotate down. We need to see the flip above this for rotations up. Look at your 15-minute structure, right? Offer stepping down. Bid is now getting absorbed here into this 105. They are trying to short this. They're trying to trap these guys. If sell side can push below this 90, then we go down. If the bid is able to hold that 90, get us back above, we're then going to be watching to see a potential trap on a step back over 125,
8
130.
basis points to around 3.72%. Its highest since 2011.
I know this is very slow, but just be patient. The structure is very clear. Again, longs to me are viable on a flip back over 125, 130. Until then, it looks like a offer is trying to step down, and we will have speed below 90s if we can do it. Sell side will gain momentum. ES holding exactly where we thought it would be. POC of previous candle. Sell side needs to step down aggressively here on both, and then we should be able to take out this low. Watching as Russell comes down into our bottom here, into VWAP at the same time. This is where sell side needs to show effort across the board. The thing that could stop us here is a strong reactive bounce at RTY VWAP, and then a failure from sellers to get this next leg down and sweep these lows on NQ and ES at the same time. That's the only thing, really. Other than that, this is playing out so far. This is a good look. New lows on NQ off of our failure there. I'm going to take off my first risk here into 80, and then let's see if we can get some continuation. Our previous week high here is at 070, which is why I'm just taking off a little risk as we're pushing down into it. And then our ADR target is at 50 below on NQ. So there's our sweeper stepping us down. Russell has a bit more room to VWAP. That's going to be where I expect a bounce to occur, is Russell VWAP. Pushing into target now, so we're coming down into that 050, taking off a bit more risk, and then we're going to leave runners for the rest. There's the speed that we wanted, right, on that flip below 90. Really nice. This is just a 15-minute time frame setup. Yeah, and then I think you get a bounce here as we push into Russell VWAP and
Brent crude climbs more than a dollar on tanker attacks and sort of was.
And then we'll figure out if we get like another leg down like that then rotates us, right? Because like the battle line is going to be, does VWAP bounce and can we get back above previous day value here? If this fails, then we can rotate down to previous day POC on VWAP, right? It'll be a rotation of this auction here. But like, let's say instead VWAP bounces and then we get back above. Oh, it's like, oh, okay, well then we're back into this oscillation. I have 10 micros left on NQ. We're pushing into target now. You can move stops down or take profit here. There's been no sign of bids yet. I'm gonna take off 5 and then leave 5 runners. I'm up 1,000 on my last 10. I have to move charts because we're pushing down. I expect Russell VWAP to be reactive. So again, I've taken off 5 here. I have 5 contracts left with a 100 average. I'm expecting a bit of a bounce. My stop sits at 112 on NQ on my runners with an average of 100. 5 contracts left. Let's see if we can find an addition, right? A place to add off of this PT at 50s with Russell at VWAP for the secondary leg down, or if this is all we get. There's been no signs that this is going to stop, right? We're in trend to the downside off of flipping our battle line, but I do think that short term, that this is a really good PT. And then from this area, we'll figure out where we want to go. We watch Russell to see if we can flip below or if this is going to sustain and get back above. I have to, I'm going to mark these. I'm taking pictures so that you at least have this as a reference, but I have to move charts down. I'm sorry. I know it's annoying. So like this is my trading for that area. Just so you can see, like I'm shorting that 105 to 124 area because we're below the battle line and we're expecting absorption there. And I'm just adding to my position as we absorb into that area. Do I pay attention more to RTH or ETH volume profile? ETH. I don't even look at RTH. Sorry, I don't even look at ETH. I only look at Russell. I only look at Russell. I only look at regular session trading for the most part. I hardly even look at the volume profile for Globex. I don't think it really matters. Just like I don't think that if we take out single prints in Globex that has any validity. I only care if single prints get taken out in regular trading hours. So to me, they're still valid unless they breach and hold in RTH. Or I consider them still active. Okay, so I want you to pay attention to what we have here on chart based off our 15-minute structure. And then I'm gonna copy and paste my trades here so that you can see how I positioned in that same environment. Okay, so I have to delete these, but I want you to focus on this area here where I circled, right above previous day value low and below our battle line. This is where we trapped that liquidity, right? This is the start and the shift of our trend. So I'm going to now delete these real quick. Or actually, I won't delete it. I'm going to zoom in so that you can see this and see our node that we're trading at and what we're doing. I just have to move charts down. So again, this is the same area where we flip our battle line and then we're holding value of our previous candle and trapping this liquidity here. So this is what that looks like. This is the same thing, right? But just with deltas into our highs. You see? So this is our same area where we're looking for risk-wise to hold this absorption into these highs at 125s, where we saw these guys get trapped, and then we saw follow through down, and then we're seeing these buys getting taken into these highs again, into our 105 edge. So this is now my risk. We know that this is where the offer has been able to push down, and then push down here again. This is the same thing as, right, this is what we were just looking at. This circle here, and then this lower offer. So I'm building a position here and averaging in as we're pushing down, and this is my risk, right? And I'm looking for a continuation down into our 050s. That's all. So I'm just building. This is our zone of interest. We've gotten our push below. And again, like the whole idea is that we failed to sustain, right? So we've trapped into these highs. We failed to get over our 170 and push up, which is what we needed to do for upside. We were building here in this node, like we talked about. But what we're seeing are buyers getting stuffed into these highs. And so when we have this flat profile where POC is sideways, right? This is our balance. This is our break of our balance, right? We broke to the downside, not the upside. Is that, do you see that? Are you able to see that this is balance right here? These three candles. Do you see how POC is flat and value is flat here on these three candles in our zone? So this is a decision point that's being made after a sell leg to the downside. So we got a large push to the downside, and then we have sideways price action.
10-year French yields rising 10 basis points to about 4.04%, the highest since 2009.
We either sustain and then pop these highs, or sustain and hold these lows, right? This is what we're looking for, the same reaction on either side of this distribution that we created, this node. You can see that this POC held resistance here. So this is a shift where we had a flat POC, flat POC, flat POC. We had flat value. We looked below. We then held POC to value of our previous candle after holding this distribution and then rotating down. So this to me now is like, oh, okay. If as long as we're holding this as resistance, we're then looking to see if this can sustain. If this can sustain, then we can look down. Because now we have POC to value of our previous candles holding as resistance after making, after sustaining the low of that little balance that we just traded. Another way to visualize this, if this is hard for you, is we're just going to put a fixed range volume profile on this, and you can see the same thing, right? So we have no interest above the value high of this balance, and we have interest on below the value low, right? Does that make sense? Are you able to visualize that? Do you see how we're trading in this node and then we make a decision on the flip? So what we're watching for is, are we, in any sort of trend, right? Where are participants located? And are we able to sustain below our value low or above our value high, right? If we're going to be able to sustain above, we're looking for traps at below, right, into these lows, and then the ability to then hold above value high for continuation. Instead, what we're getting is a failure at our value high, a rotation down to our lows, a failure to get back in, and then a rotation lower. And then we hold previous day value low, right, as well as our current value low as resistance. That gives us our next leg down. And then this becomes where we're operating, because this is a failure on breakdown. This is a retest of our breakdown and failure to get back in. So as long as this area is holding and we don't get back into value, there's no reason for me to not think that this trade is going to continue to the downside, right? But if we got back in, I'm invalidated. And then I would expect a rotation back up to 170 because we failed to sustain these lows. Does that make sense? Are you able to see this? It's very important, because this is like the philosophy behind everything on every time frame, right? Do we find acceptance below value or above value, right? What's this auction telling us? And do we have that confluence on our smaller time frames as well as our higher time frames, right? Like, where is participation located? Where are buyers and sellers located in these candles? Are buyers trapped in the highs? Are we seeing participation in the lows, right? Where are the participants? Where is the offer? Are they absorbing and then pushing away from that area? Because that's telling us that it's responsive, right? Okay, let's see if we get more. If ES can hold this, we'll have more downside. This is just, again, this was just a slight bounce I was predicting off of our 50 take profit. We look like we'll potentially hold here. I'm not looking for more until we flip below 35s on NQ. This is where POC to value low is. So this then becomes our area of interest where we need to see sweepers step down, or we'll expect that we need to come up higher first to trap liquidity, and then we can go lower. And you can see that off of just our footprint candle, right? So we just look at the value low of our previous candle and we watch to see if we can get above this 90 to 105, or if they're going to be able to sustain. Same thing with NQ, or with ES here. I'm just going to mark our levels. This is POC of our previous candle, and this is our low of our previous candle. We need to see a look below and hold of this for more downside, or we'll have to trap up higher first. Let me mark the value high of this previous candle here, so you can visualize this on the 30-second while also looking at the 15, which is what we're basing our trade off of. So you can see we have an LVN at 080, and that we have this offer, right, this edge of our node here. So what we're watching for is sell side going to be able to sustain and trap as we push back up into these highs, and then get us below for an initiative sweep below this 35. Same thing on ES here. From this, do we push up, fail to sustain, and then can we see an initiative sweep down? Or is this low in play, and can we flip above and hold this, right? If we can see a sustained back above previous day value, then we can go up. If this fails, we're going to be watching for the offer as we push up into these highs. We are in a downtrend continuation potential pattern, right? We are looking for our offer to be into these areas, because that's where sellers were last, where they took in, right, into that offer. So we now need to flip these areas if we're going to continue higher, or we should expect that we will balance here, until we're able to sustain either below our previous lows or above our previous offer, right? Where we swept. So now we have a very clear pivot on both sides of where we should expect continuation. Why delta footprint over ladder where you can see actual volume? I don't know if I understand that question. So our footprint is the historical representation of where participants were located off of the ladder, right? So the ladder is showing you where passive liquidity is, or sorry, where limit orders are. Whereas with our footprint, it's showing us where the aggressive market orders were. So the ladder, or the DOM, if what you're talking about is what I think you're referring to, is showing us where like current liquidity is being offered, right, on either side, but not where participants actually traded. So what I care about is where the aggressive orders were that actually moved the market and where the passive orders are, right, that take in those market orders. To me, that matters quite a bit more because we already know where the auction is taking place based off of the structure that we're trading around. What I care about is the order flow that's actually going to move price, not passively, but aggressively, right? That's actually going to give us a responsive movement or momentum or some sort of sign of life, right? So what we care about is where are traders actively, aggressively trying to push price? And are they successfully able to push price in the direction where they want, or is their effort not being rewarded? Sorry, footprint with volume on both sides, delta of -10, call B on 100 volume and 10,000. Oh, okay, so you're saying like why not have both sides showing instead of having the delta having the total? Because I only care about the difference personally. Yeah, I only care about the side that's bigger. I don't need to see both sides to know what's happening. I can infer it. That's all. Because it's very easy to infer what's happening. So I'm only looking for the information that gives me an immediate hint, so that I don't have to like deduce it myself, right? Like it's very easy to see both sides and know like it's basically just splitting it. It's doing half of the work for me already. Like it's doing the part that I care about, which is the subtraction. Like, why have both sides on when it's going to already just show me the difference between the two, which is what this mode is doing. It's showing you the difference. All right, this is an incredibly important area if we're going to reoffer. We need to see buy side get absorbed here on this look below and then an offer sweep down, or this is still going to be able to sustain here. We want to see Russell lead down at this lower edge, or again, we will fail to push below. We want to see a price push below value of our previous candle.
With the S&P now down 0.2%.
Right, we have this very clear node that we're pushing into, and we want to see sell side be able to sustain this and then come down from here. If we can hold this with ES doing the same maneuver, then we can go down. If this fails to gain traction below, then we don't have our next leg yet. It needs to be aggressive below value here and hold this POC now at 803 on ES and 50s on NQ. And then we need to see interest below this value. We are trading between our value low and POC that we marked, right? So we want to see this sustain and then sweep with Russell follow through here. So let's see if we get our next leg following our idea. I'm now wrong above 60. That's value high of this current sell side, current candle. So with Delta, I would assume a move on high versus low volume isn't that important. So you're talking about total volume compared to like that, so like the total bar volume versus the amount traded? I'm just asking a clarifying question. I wouldn't say that it's not important, right? Like the overall, like what we care about is participation, right? And the amount of effort, is it being rewarded? Is it not, right? Like these are the things we care about, because that determines if we have a active, how do I word this? Like an auction with no volume that has just like a couple participants that's illiquid, that's being manipulated, or I don't want to call it manipulated, is being like an illiquid auction that moves quickly, doesn't make for a confident trade for me. Like volume plus large deltas matter quite a bit to me, because that's like, that is showing that, man, how do I word this correctly? Let me think on this for a second, because I don't want to say the wrong thing here. I care about like the volume on like I don't really care about the volume on a candle very much. I'm not gonna lie to you. I care about like where the participants on that candle were located, and I just got stopped on my my sell here, my runners at 60. Like I said, if we can't hold here at 60, then I think that this guy's invalidated. We'll look for a secondary bid. We failed to sustain below. We didn't get the secondary sell, so this just rotates up. POC is shifting here. We have to be very careful. We held the lows. Inability to push down, which means that we have to seek higher first before we can go lower. So to answer your question, like if we're in a low vol environment, low volume environment, and we're not seeing any sort of like active participant, so an active participant is someone who's like market buying in, and it's much more passive and slower, then I care less about that action. But like the things that move the market are like people who are buying and selling at market price, right? People who are willing to cross the spread. That's literally the only thing I care about for the most part. Like that's because like without it, we expect price to basically random walk, right? Between our through our nodes, right? Through our distributions. Like that's how a distribution forms. It's a random walk, and then like we form a node based off of that action. So the only participants that I care about and I'm interested in are the ones who are actively trying to cross the spread to move price in a direction, right? Like they're actively buying across into the other side of the DOM, right? They're willing to buy at a higher price or a worse average because they think that the market is going to move in a direction, in a certain direction, right? So I care about if those guys are offsides or onsides, and where that those participants who are willing to cross the spread are actively trading, right? Are they offsides? Is their effort being rewarded? Are they able to push through based off of where they're aggressively trading? Or is passive liquidity taking in that aggressive size and failing to like, are those buyers failing to do anything with it, right? Like, that's the stuff that I care about, because that's the stuff that actually moves the market around the areas of interest that I have, right? Without those active participants, I don't get the moves where I want, and I don't get them at the speed that I want, right? That's all that I care about, is like, am I going to be able to find a trade that I'm confident playing in? I might get back into a short, we'll see. Watching to see if the bid can hold a higher low here, or if we just are trapping liquidity after stopping me out over 60s. Watching. If we don't have follow through here and can't push back up, then we will then have a really solid reoffer below 35s, and I'll get back in on that, trapping this liquidity into our highs. Just watching on a retest here. Sweeping, trying to push below into our level of interest. Still holding, no change. But we have trap buyers now into these highs, which I care about as our catalyst. I just want to see interest now below, and I'll get back into this. They're trying to take it into 35s right now. So what I want to see is, I want to see that these guys remain offsides on retest. And then if we can get below. So this 50 to 55 to 70 on reoffer. I want to see them get taken in, and then we want to go down. So either a clear sweep below 35s and hold, or a push into 50 and then rejection and continuation down. Yeah, that's what I'm watching, Ty. This now we're just looking for a lower offer. So as we push into like this 45, 55, I'd like to see a secondary buyer get absorbed to show that the offer is willing to step down, and that those guys above into 70 continue to remain off sides, and that should give us the fuel we need to push down. So let's see if they can do it here. So far, they're taking it into 45s. We just need to get below this 30, and then sell side then has enough, I think, to continue us down. So the reason why I become interested here again is because of the failure to see follow through from secondary buyers after pushing us up. All that happened on this candle is we took in size, and then we failed to sustain our edge for a higher low. So that makes me think that this liquidity is now trapped, and that because like what you would have wanted to see here is this look below, and then a higher low maintain for an upside move, that this then becomes our risk. But we didn't see an active bid step in there. What we saw instead was basically just a look above and then no follow through. So it just feels like we were stopping people out, like myself. And then if we look below these values, then we're trapping all of this liquidity. So it's still two-sided, but if we can hold this This then is like very bearish to me, because then we can look down pretty well. So let's test into this now. This is that 55 that I was just talking about. We want to see if this 55 to 70 can hold offer here for a lower high. If it can, we're in a great position for continuation down. Watching to see what we do here into our edge. We want to see them get taken in here and then look down. If they take out 70s, then this isn't worth it. Again, it's the look into this area and then the follow through below afterwards. So we want to see them get taken in into 55 to 70 and then push back below 35 with a lower high if they're going to go down. If this is going to fail, right, we're going to see the bid start to step up here at 55s instead and then push over 70 for the opposite reaction. We have a participant who is offsides into 70, and we have a participant who's offsides into 30, right? So we're watching to see who's going to win here between these two participants on either edge. Oh, you know what'll probably help you guys visually? It's the same fucking trade as before, as the last rotation, right? It's a value rotation where we're looking for acceptance below balance low or balance high after trapping the liquidity. It's literally just the last, it's the same thing again.
UK long-dated gilt yields rise to 3-week highs. The 20 and 30-year yields are up around 10 basis points on the day.
Right, it's just another node that's building out after a sell side leg down. It's the flagpole and then the flag, right? Or what you could call like a spike base. That might be a better visualization for you. Who's offsides? Both sides are offsides. Yeah, you got that guy at 65-70 who's still offsides, and you've got that guy at 30 who's offsides. And you're just back in balance. We're just looking to see who breaches and then gets a secondary. Like if that guy at 70 continues to maintain offsides and we absorb here into 55 to 75 or 70, and then we push below 30s, then we go down. If this guy at 55 is able to sustain the bid and we take out that 70, then I think the guy down at 30 gets punished instead. And then we look for a pop back up to 100 on NQ first before we figure out where we want to go. A lot of effort trying to push over the 70. Let's see if they get sustained or if this is going to fail and then rotate back down. Good bid at our 50s, trying to push. This is the top of our value of this 3-candle distribution that we're currently building out. Can we sustain value high, right? Or does this fail and then traverse back through our range? That is the question on both ES and on NQ. You'll have your answer as soon as Russell loses momentum, which will probably be into our top of our range here. Lot of effort on ES being put into these highs, into our value high. Not much reward, right? But what matters is from this area at these highs, can we push below, right? That's why our pathing looks like the way it does. Is it's failure to sustain, absorption into highs, and then clear takeout of our lows for continuation down if it's going to reverse. Bid trying to step up here on new 15s, trying to hold our value edge. We want to see a very clear sustain here if it's going to go up, and then it goes to 100, and then we figure out what we do there. Watch Russell as we come into 68s for a potential loss of momentum right into this. This is ES, our area of interest. Again, we're watching to see if we get follow through here or if they trap, and then we then rotate below. We would need to get above this 810 for us to feel like longs actually have any merit. Same thing on NQ. I'm not interested yet in anything until we can flip above our previous day value at 105s. This is just a rotation back to our known seller off of a failure to do anything at our lows. So we're looking to see if we trap here and then we rotate down below value, or if we're able to sustain and then rotate above. We can look for longs on a hold of here. Same thing with ES. Or we look for sell side to be active here again and then look down below. We're watching Russell to lose momentum here as we push into this, if it's going to go down.
The French-German 10-year yield gap closes at 84 basis points, which is its widest since October.
And the reason why you don't need to get FOMO here on longs is that if we're going to continue up, there will be a great entry on the flip and hold of this for the right side of the V, right? Right now, all we're doing is trading back up to our previous seller, right? There's no break of our downtrend. There's no invalidation of anything. It's just coming back up to our last supply. So if we can flip that and hold, then we'll have a great continuation trade. but we have to be aware of the overall auction that we're currently trading in, which again is trying to accept, right? We failed at our lows, we sustained, and now we're trying to accept above this value here. So if we can do it, great, then we can look up. But if this fails, then all we're doing is exhausting buyers into these highs, and then we're going to then create a liquidity event by exhausting these buyers, and then sellers will take advantage on the look below, and then this will be offside liquidity that will then continue this move down. So what's happening currently on NQ? What do we see happening on the 15-minute? The same thing on ES, actually. What do we see happening visually? Yeah, they're getting absorbed, right? So far. So let's see if we get follow through on that, or if they're able to pop us back up. But as of right now, right, like they're getting pretty cooked, exactly where we thought they would. So we'll see if this is able to be punished, right? Like if they punish them further, or if this is able to hold. Nothing's invalidated yet, right? Like the buyers are still in control, but they're definitely getting taken in size-wise. We need the sweep through to the other side. But yeah, if they hold, let's say, like 70 to 80 right now on retest for a lower offer, then you'd expect at least to traverse through to the other side of value of our profile. We'll see. for those unfamiliar with what we're talking about, this is this size right now. There's a lot of size, a lot of market buys that are happening that are pushing up outside of the value of the last 3 candles, and they're so far not being rewarded, right? A lot of size, POC into high, current price below POC to value on NQ, and ES POC to value high still holding as resistance, right? We're still holding that, and we're absorbing into where we sold originally, right? We're pushing back down. So again, we are watching to see if we can accept here, but if these guys fail, then we are going to be looking for a transition at least through, a traverse back to these lows. So that's what we're watching is, does the buyer fail here? Is passive liquidity taking in all of these market buys? And then are we able to then punish off of a full traverse through that range? Because we can see that absorption in real time, right? That's what this is showing us. And we know the value area of this 3 bar because we can see it on each candle. So when we turn on these again, we can see that this is where we were expecting that to happen, but we still need to be able to push below value low from here to then punish this as a catalyst. So if I now turn on our charts as well, our areas of interest, right? Like this is the box, right? This is the current balance that we're trading in. This liquidity is now offsides above that box. And what we expect to happen in AMT is that we now are accepting it back into this range, and we expect a full traverse to the other side, right? And the only way that this gets deflected is by a strong hold of our POC or our mid, right? That's how that invalidates. So if this is going to go up, you want to see a strong bid at POC that then takes out this high, letting you know that buyers are in control. If this fails from our POC to get back outside of value and we hold this, we're then going to be looking for a full rotation down and then probably a takeout of these lows because this liquidity is offsides. And then the offer has clearly defended a lower high at the value edge at 70, right? So from this mid, are we able to get back outside of value, or does this hold? And then we look for our secondary sellers to then aggressively sweep below, trapping this liquidity offsides and liquidating them, right? We need to get below this value here. We're just back into this auction. It's the same thing on ES. Offside liquidity into our previous sell, now rotating and traversing through our known range. Need to take out lows for more. But if we can see a strong secondary sell here and we can push down, then we have a great downside movement. If POC or the mid of this balance is able to hold and then we're able to take out highs, then the long side is in control. These are our AMT rules. New 15s have opened. We held our POC and bounced. We're unable to sustain below, which means that short side got invalidated. We're now looking to see if we can get this continuation here and push above, or if they're going to fail to push over this 810 here on ES and our 104s here on NQ. Following our idea, our AMT rule, where we are not looking for a full traverse of our range, right, or our value, if price reacts strongly from the POC, right? That disrupts rule 1, which is exactly what happened. We are now traversing, right, back up to our previous value, which is rule 6, because of that, right? So when rule 1 is disrupted, we then look for the reaction from rule 7 to then traverse to rule 6. Does that does that make sense? Right? So this is exactly what I'm talking about. And this is why I said it's very important to understand your rules, because they tell you exactly what we're looking for at any given time, right? So rule 1 is if we accept back into value off of a look above and fail, right? We looked for the rotation back down to value low. The only way that this is disrupted is if we have a strong positive reaction off of POC and then are able to push above value high. If we do that, then I'm watching for how we then look. We then look for rule 6, right? Or law 6, which is oftentimes the destination of an imbalance is a prior old balance area. Typically the first stop is the point of control, right? So we're looking for a rotation off of that POC hold back up to a previous distribution, right? A previous seller. That's then becomes the target and area of interest. If we can then step above that from the hold, then we have a break of our downtrend in a right side of V. Because sell side failed to push below this and then offer it as resistance, there was no secondary short or option to take that short opportunity, because we did not trap above value and then hold below value, right? We held the POC and then pushed away from it, which means that sell side is now offsides below, and we found acceptance, at least short term, from buyers, right? And we're looking for a rotation back up to this upper node. Again, it's because of the strong reaction at POC, we can then invalidate the secondary leg of the short, right? That disrupts option 1, and then we look for 6, right? The seek of the previous auction. This is your bread and butter of how we trade through and understand where we're wrong and when we're right. Hopefully that makes sense. So when I talk about this hold here, right, and this failure where we bounce POC and then we look up into these highs, it's because we saw this bounce here that we shouldn't be looking for the rotation down to the other side, because we saw strong bounces at POC on both ES and on NQ at the mid. So we failed to traverse, and then we breached back above our value high, telling us that we were going to go higher, not lower first. Do you feel me? Does that make sense now? This is why it's so important that we see that trapped liquidity as our catalyst up here, and then our secondary seller as our vehicle to enter for the continuation trade below value on retest. That gives us our play, right? This is still valid in the sense of we could still trap into these highs because we're trading back up to what? Our previous distribution, right? Which is into these highs. We can see that, right? This is that POC that we'd be going into. So as we come up into this node, we're watching to see if they're going to take in size. And then if we can then look below, great, right? But so far, we can't expect that continuation trade because we got such a strong prominent bounce at our mid, right? Our POC at 50s. We have to step below this 803, 801 on ES and this 50 to 35 on NQ for the downside continuation. And then we need to see them hold it and defend it as resistance. That is the only way that I am willing to look for continuation. And the reason why we say that is, again, because we have flat POCs at our lows, and we have a very clear value structure that's built here where we have a distribution, right? We have clear and equal value lows and value highs on a 3 candle range, which is an hour, or 45 minutes, right? So we've held this structure and we've seen no interest below. So I
Use
can't
really
look for short
military
continuation
incursion
until I
into-
see that below. All we can look for is
Israeli
tracked
military
liquidity
forces
above.
have once again violated Syrian territory, according to Tasnim News.
Or we get a right side of V, right? Russell continuing to push. Upside potential still there as long as Russell continues to push.
Tasnim News add that after a ground incursion into the outskirts of the Quneitra in southern Syria, Israeli soldiers set up a checkpoint and began inspecting Syrian citizens.
Okay. The strong reaction from POC, is that another way of saying like the bid stepping up on the ladder via like delta rating, which from like a footprint perspective is bullish? So you have to think about it like, you can think about it kind of. Like think about it as like an actual auction. What does it mean if buyers are willing to buy at a higher price? What does it mean from just like that as like a super basic auction perspective? Like say that there was something that you like if we don't need to traverse the entire range, right? Like if we don't need to continue, if we're not we're accepting basically higher prices, which means that there is a shift in the actual auction itself, right? If people are now buying the mid and defending the mid instead of looking for discount right at our edges in our overall distribution, that is telling us that there's now someone actively participating, not just at the mid of the price, right? The POC of the price. Sorry, I keep saying price, the distribution, right? So like, God, I wish I could like have different pages of drawings so that I could turn this off and then draw something else. I mean, I guess we could, but oh, you know what we could do? Okay. Right, so like if you have a distribution or you have like an auction that's taking part, and we have like this is a normal distribution, it looks like this, right? It's a bell curve. Price randomly walks between the two and it creates this shape, and then the average or the price that the most volume, right, the most participation is occurred at is the point of control, and then your value areas are your edges, right? So when we stop random walking, right, the way that we can see real participants from those that are just kind of like randomly buying is with order flow, right? We're seeing people who aren't just like passively taking in size within this area, right, which is value. we're seeing active participants start to buy across the spread. So they're willing to go to the other side, not wait for price to come down. They're willing to actively push into the sellers who are on the other side of the DOM. And what we're interested in is, if we're going to start to shift, are the participants who start to actively buy at what was seen as a premium price, so above this, if they are willing to buy up here, why are they willing to buy? Well, it's because they think that price is going to continue higher, right? So if we see participants start to accumulate at our highs where selling was occurring and we were randomly rotating, I don't want to call it random, where we were agreeing on price to rotate in between, right? This is an agreement between buyers and sellers. That's what this is. So we had an active selling price, which was considered our premium price, and we had an active buying price, which was considered our discount in our auction.
Filing, SoftBank Group cuts its share stake in TSMC by 71.5%.
Right. So when we have people
who 565,000 sponsored ads.
So when we have people who are actively buying at our highs, they think that price can continue higher. So the only way that they can get punished is if sell side says, wait, no, you're crazy, right? Like, I'm going to take in all of these buyers because these guys are idiots. They think that, the price of Beanie Babies is going to go up forever. So what they're doing is they're taking in all these buyers and they're saying like, hell yeah, this is the greatest price. I'm going to offload all my inventory, right, of my Beanie Babies, because I think that this could never go higher. So I'm going to take in all of these active buyers. And then the price goes down because sellers start to offload into these buyers. The buyers don't have enough ammo because there's so much supply into these highs, right? So when we come back down to POC, which is the average or the most traded price within value, this is now fair price, right? This is what that means, POC. So if active buyers participate here and are still being like, no, I think that this is still undervalued, right? I'm willing to defend the mid and I don't think we need to come down to discount. This is the best possible price I think we're going to get, right? If you think that if you're buying POC, it's because you don't think that we're going to be able to traverse back down to this discount price. So buyers are still saying, these guys are idiots. We're going to go up higher. I'm going to buy because we're now defending. This is going to be the lowest possible price, right? So this is the defense of that POC. This is now the new low in their mind. So buyers now push us up because they think that this is now the best viable price, right? And when we hold that and don't fail, right, when supply isn't enough on retest here, what is that telling us? Well, that's telling us that they're right? If supply can't maintain this on retest and traverse us back down, and there's enough demand from the buyers here to push us back up above value, and then we see buyers then continue to participate above value on a secondary, they're telling us that, yeah, this is the new low, and we're shifting the paradigm, right? The auction has shifted. Price, this isn't discount now. This is discount. And not only is this not only discount, this is now the low, right? They're now willing to buy at a higher price where sellers were before. So the auction has shifted. So what we now need to do is find where, if this is now shifted, if buyers are now willing to buy at a higher price, right? Higher low, higher low, higher low, where are they going to sell next, right? So we now have to go and find where sell side found interest, or where the last area of, where the last auction took place, because that is where we're going to traverse back towards. Does that make sense what I'm saying? Right? Like, this is where the current accepted value was. And because they defended the mid, this became the new low. And when we then defended what was our previous premium price, right, as our new low, right, we're shifting the auction up. So now it's a seek to come back up to where sell side was before, because these guys at the lows, there wasn't enough inventory here to defend that price, right? To defend this auction. There was more buyers willing to buy than there were sellers willing to defend. So these sellers stepped out of the way, right? The rest of that inventory stepped out of the way because they see that this is a stupid price to sell at. Why would I sell my inventory here if we're going to go up higher, right? That's what they're saying when they step out of the way and let buyers then push up. If there's not enough supply here to continue to rotate our auction in between our two levels, it's because sell side steps out of the way and say, hey, we can get a much better price. Why would I sell at $50 when their buyers are more than willing to buy here, and the value now can go up to $100? So I'm going to move my liquidity. I'm going to take my liquidity away and I'm going to put it up higher because the demand now is here at 50. Do you get what I'm saying? And that's rule. That's our next rule, right? Which is that shift in value. So we're going back up to where a previous auction took place because there's clearly been a disjoint or a shift in the narrative, right? A shift in what was an agreement between buyers and sellers, right? There's a shift in demand to supply, right? There are more buyers willing to buy than sellers are willing to sell at these highs. And so as long as buyers are willing to buy higher, right, the price will go up because there's more demand. Right, and that's the auction process, which is just the acceptance between those two areas, and then where that shift occurs. Are there active participants? Is there a willingness to shift the auction lower? Right? Do buyers step out of the way because they no longer find this valuable? Right? If there's not enough inventory on the other side or enough demand on the other side, then those buyers will shift to a price that's lower because they see that this is no longer a investable price. Right? If they can get this price lower, they're going to stop buying here because they're seeing that there's way more sell side demand above than there is buy side demand below, right? And so if there's more sellers above, then why would they buy here when they know that they're going to be able to get a much better price lower, right? If I know that this is going to come back down.
Houthi forces targeted the port of Al Mokhar with a missile.
If I know that price is going to come down to $25 and why would I buy at $50? Right? Or why would I do that? No, I just step out of the way and just come down to where the prices were lower before. Right? Like think about like sale prices. Like if you ever look at like a like Black Friday deals and you go and you look at like the price history.
We are seeing a text release here from Fed's Goolsby. It says US GDP and labour market are basically stable. Continued spending weakness would be worrying. The past two readings on productivity were very poor. Goolsby says, I'm encouraged by CPI reports, but we need more data. Weak retail sales represents just 1 month of data, though, citing today's data. Supported the decision to hold rates in July and says a persistent drop in productivity would change the AI narrative.
Oh, shit. All of our drawings just got deleted. That sucks. What the hell? Will they come back? Oh, no, they're actually gone. Ah, damn, that sucks. So again, it's like you look at like a Black Friday deal and you see or like a sale deal and you know what the base price is. You know that price has come down previously, you know, to a much lower price, and that, you know, before Black Friday, they actually raised the price much higher so that when that sale price comes down and it's like, oh, look, it's a 50% sale. It's like, no, actually, that's only like 20% of where price has gone down before. Right? Like they manipulated price higher so that when the selling event occurred, right, when they wanted to put it on sale and advertise it, it was like such a better deal for those participants who didn't know what the true value was. But if you go and you look back at the price history, you're like, wait, no, I can get this at a much lower price when there's actually less demand. So people will then not buy there because they know that they're getting a poor deal. So they'll come down to a previous area where they know that price wants to, gravitate towards naturally, right? Because people can artificially push prices, but they only have so much inventory. They only have so much money to actually manipulate price. So eventually price will come back down to that fair value after that supply is gone, right? After that inventory is gone. That's holding price up to where it is, right? Once that demand is gone and it peters off, it's like, oh, okay, we come back to reality. And then that's where people want to buy. So it's like, is this when I talk about like an auction is willing to sustain, right? It's like, are there buyers still here willing to continue to defend these higher prices, or are they exhausted, right? Is their effort being rewarded? Are they unable to move price? And is that follow through taking place, or are they did that inventory step aside, right? And is price coming back down to its natural, back to reality, right? Back to its fair value. Was that helpful? Do you see how we held POC and like our rotation is just back to the previous distribution where that seller was, right? So like this is just to where sell side was willing. Like, why would they continue to sell here if buyers are willing to buy at higher prices and they know that they're going to be able to sell higher? Like, it just doesn't make sense to not sell higher. If buyers are willing to take in that size, then punish them, right? Get that higher price. I don't know, hopefully that was helpful. It's just like a really really blunt crash course on like an auction, but that's like the basics of it, is like we can identify structure, right? And remember, like, structure or our nodes, right? These distributions are auctions that have taken place. Each one of these nodes are basically showing you, or it's the narration of where value was found and where these auctions took place. And an auction, remember, is the agreement between buyers and sellers, right? And then it is the random walk in between those buyers and sellers where they've agreed upon, a normalized price in the market. And then it creates these nodes. And these nodes are where we are interested in, because these create our value edges, right? Where value is perceived fair within this area of the market. And when we push through an LVN, right, and we rotate back into a different node, right, or previous auction, we now have a potential willingness to, right, do what? Well, if this is now holding and we're outside of this old auction, well, then we would expect to rotate to the other side of this new auction, right? Because we've just shown that this is now the floor. So if this is now the floor, this is now the ceiling, right? Because we've shifted value, right? This used to be the floor, and now this is the ceiling. And if this is now the floor, now this is the ceiling, right? So it's the same thing, where we traverse through these LVNs, right? The low volume nodes, and then we look for acceptance back into previous auctions, because that then determines where we're going to go, right? That's how this works, is that these are, these determine, right, like our where supply and demand are, right, where people see value, right? And then POC is a target that we look for, not an entry, a target for the rotation through the distribution, right? And we look to traverse back to the other side. And we look for the ability to sustain at the edges of our distributions, or the edges of our value, right? So when we see acceptance at the edge of value, that's acceptance outside of our agreed upon price, right? Which is what we just talked about here, which is the hold of our value high, is acceptance. And what we're looking for is then a continuation and a rotation back up, right, to our previous auction. And then from here, we then figure out, is that sell side still in control here? Are we still maintaining our previous seller auction? Is this still in control? Because if it is, right, then that's it, right? You have to take profit there, because we know that this is where value was found last, and sell side is still in control in the overall movement, right? We're still in a downtrend. So this is just a rotation back up to our previous seller in this overall trend down. So the only thing that we care about now is, are we able to step back into this auction? Are we able to maintain this auction, right? These highs? And what is our reaction as we push into these guys, right? Into this LVN? Do we find acceptance outside, or does this continue to maintain as the top? And this is still just the accepted premium price. And then we rotate back down off of a failure to shift outside of this node, right? That's what we're currently battling with. So as we continue to develop, right, this node gets larger and larger, because more time and more volume accumulates here, right? And every failed push outside of the distribution, every failed look above, eats that leg and it rotates back in, and then it becomes a larger node, right? So the accepted value starts to shift. So if I now retest this, right? So this is where the value edge was before at 70. If I now remeasure this, you can see that this node is shifted. So what was our value high before at 70 is now our POC, right? That's now the point of control. So we've seen a shift of our auction where our previous high is now the mid, right? And now our value high is up at this 90. So our auction has shifted. It's grown. The accepted area, right, of equilibrium, right, the accepted area of where price is willing to traverse, right, has shifted. So this is now the normalized auction that we're currently trading in, which is this rotation up into our 90s and down into these lows. So now we're watching to see if we're going to be able to rotate back through, or if we can find acceptance above and rotate back up into this previous auction, right? This is that LVN. So that's all we do. We just do this on different time frames, right? So this is on a 15-minute chart, but the same thing can be done on a 30-second chart and a daily chart, right? Like how we came up with our low is the same way of what we're doing right now in this auction. It's the same thing, right? Like if I go and I look at why we were able to find those lows, how we were able to determine where demand was and where we were going to break out and blow up, right? And break out in like to a larger degree is because we did the same thing, right? This is shit. One second. I'm going to do this on a different chart. Okay, here we go. Right, like this is how we determine our demand and like where we're currently. Right, this is the same concept, right? We had a larger multi-day auction that took place, and this was the value high and low, and we continue to just rotate in it. So when we were failing at these edge highs and we didn't see a strong reaction at our mid, right? Where are we going to go? Well, we're going to traverse back down to our value low, right? Because this is the accepted bounds of price, the accepted reality that we're currently trading within. This is discount, this is premium. So if we fail to sustain that mid, right, we're then looking for that mid to then rotate and then push that back to these lows. Does that mean that this is this is the end of this is going to continue down? No, this is now a discount price. This is a great price to buy because we're still showing no interest below, or we have no ability to sustain below it. So this is the best possible price you can actually get, not the worst price, which is scary for a lot of people because people start to sell down here instead of being like, oh no, this is a good price to buy. This is where people load puts. This is where people load shorts right into the lows. They get FOMO because they failed to look for the moves, at the high or the mid of our value. And so when they load the boat into these lows, this creates pressure. And when we have upside, we then are able to then squeeze those people, right? Those participants. And then we get that big rotation up because now we have all this offside liquidity into our lows. So that's the difference that's what we look for, is we look for structural levels, right? Based off of AMT, right? And our volume profile. That gives us areas of interest. And then we watch order flow into our areas of interest to then let us know if we have a setup for the execution layer. Is there someone who's trapped into these lows actually, right? Are there people willing to buy this price actually? That's the order flow layer that lets you know, is this a good price to buy? And we saw at these lows, that's what we called, that this was going to be a manipulation into CPI, that they were pushing price down so that they could get the best possible entry for the continuation up. And then we saw these guys get trapped into lows, right? And then what happened afterwards? So we gap up, we still hold our top of value, right? That hasn't shifted. But what we do is we hold the gap from these lows, which is then, this is accepted price. We have accepted this gap. When we hold a gap and we don't have to retrace it, and it's not filled, that is an acceptance of price. So when we gap up from our lows and show that there's still demand down here, and then we push up and then we tell the market, we accept this price. We don't need to come back down to retest. This is now our floor, right? Because we've now told the market that this was the best price you were going to get. And because we don't need to retrace this gap, this is now the best price you're going to get. So if you don't buy here, you're fucked. That's what this is telling us. So this is what we're advertising to sellers. We're saying that this is now our new floor where we're willing to buy. And if you don't buy here or close your position, you are going to get royally fucked when we push back into this level, because we have now accepted this as our new floor. So on the next session,
Canada
after
and the
holding our
US
gap,
discuss critical minerals and defense in talks.
what do? We break out, right?
So Canada's
Sell side steps out of the way.
post on X.
We push up to a new high, right? A new area of accepted value, because we gap up and we've now shown or told sellers that this is now the new floor after showing interest at our lows again.
So excuse me, it was not Canada's and who posted on X about that. Again, this was from the Globe.
I hope that makes sense. Like it works on all time frames, and then you use order flow as your execution layer to know if these areas are going to maintain. But this process works on the 30-second, the 1 hour, the weekly. It doesn't matter. Price is price, right? Auctions are auctions. All right, we're rotating back down to our value low. What we've done now is we have failed to accept higher, right? We have gotten back into our range and we're rotating back down to our lows. What we're going to be watching for is there demand still at our lows? Is this still considered discount? And from here, are we able to then traverse back up? And is there a seller willing to defend this edge? What I would be expecting is, because we have offside liquidity above, that there will be a buyer here. But what we're going to be watching for is this seller willing to now defend and put in a lower high, keeping this liquidity off sides. If they can do that, that is a failed shift. And then we're going to be looking for a rotation below this participant. And then we can look for a breach of these lows. So let's see what they do. Hopefully you found what we just talked about useful, and I wasn't talking to a wall. It sucks that our drawings got deleted, because nothing's changed here. Again, this is where we were expecting that seller to be. We needed to see a shift below and hold. It's the same reality that we're currently transitioning through, right? Which is offside liquidity above, retesting to see if our value edge holds on retest, rotation to the other side. We need to see acceptance back below value for continuation down, or we will continue to traverse between these two. So we want to see a seller willing to defend our edge, and then
in 10 minutes time now at the top of the hour, you see the release of the weekly Baker Hughes rig count numbers. Total rigs prior 588, oil rigs prior 454.
This is the price currently being contested by sellers on ES into that 805. They're trying to gain acceptance here below 800s. The issue with this on ES is that NQ isn't in a place for this breakdown to actually take place on ES. We're not ready for this breakdown on ES with NQ where it's currently trading. Like NQ can traverse down into 50s again, sure, but Russell's still at VWAP and holding, and NQ still has this 50 to 35. So I would expect that this could transition further down, but we will get a relief bounce that will retest this if it does break down when NQ comes down into this low. We are not ready for a real breakdown on ES yet. Could this go down further and break these lows? Yes, definitely, based off of what price is doing. But we should expect that we get relief that results in a retest of this pivot from the other side as NQ comes back down into our value low. Same thing with RTY as we come down into this low. That will cause a relief bounce that then maybe will be our reoffer on ES. So if you're not already in, there will be a potential secondary opportunity as these come in, and we see if a seller steps up, right? Same thing here, right? There's a buyer offsides, offers trying to step down. We're coming back down to this value. We'll see what happens. But we can anticipate that relief bounce because we're still trading within the accepted range on NQ and ES. Right, so when those come down to our accepted range again, they will get a little bit of buying participation, even if we're still in a downtrend. That would then cause that relief across market. That would then give you a great secondary entry for that lower high. But you should anticipate that like ES isn't ready for the breakdown because the rest of the market is still trading within its balance. It's a good way to like stop yourself from taking a shit trade. I'm speaking in the voice channel on Discord, in the futures voice channel. My name's Sig. There's less delay if you're in the live voice.
It's been 5 minutes time now. At the top of the hour, we see the release of the weekly Baker Hughes rig account numbers. Total rigs saw a per hour of 588, while oil rigs saw a per hour of 454. US stocks fall, with the S&P down 0.2%, Nasdaq down 0.5%, and the Dow down 0.3%.
afraid of that Russell view up as well. Yeah, I mean, it's hard. Like, why would you take a trade here if not everything is moving together? Like, maybe you get follow through on ES, but it won't last without follow through on NQ and RTY as well, right? It's just not, it's not ready. And again, like, you might still be able to get a decent move, but without that shift, like, you should expect that or anticipate that there will be buying at RTY VWAP because it's been very responsive. And the same thing with like NQ into these lows. Like, there's literally been zero interest below our identified low off of our, this POC shift, right, where the sell side stopped and that POC to value was in our low. Like, we've yet to see any interest below that area. So to me, that's like the big shift, is once we see this flip and actually sustain, it's like, oh, okay, yeah, we're ready for our next leg. Oops, I didn't mean to move that. So when like the full market is willing to participate, like, sure, we can for sure execute there. Right now, we're just back into our accepted auction, where sell side's very clearly back into our 80s, and we're holding that, and we should expect a rotation back down to our 50s. That is the traverse, that is the reality right now. And NQ is getting, ES is getting that shift down that we were talking about as NQ and RTY are coming down into our lows. And I think you'll get a nice re-offer here. So like, again, ES is leading, but we're still within our rotational rate, our rotations on NQ and RTY. So when these do flip, right, and these do come into our lows, we should be expecting a bounce here that retests at least this ledge, if there's any sort of like confluence, which there should be. We have 50 seconds until new 15.
Shortly expecting the weekly Baker Hughes rig count numbers.
And again, like, I think this is one of those things that you just kind of start to understand, which is like, if you don't have confluence across markets structurally, or like flow wise, right, participation wise, and there's a divergent market and you're trading the divergent one and not the one that is moving with price, you're not waiting, then that setup is automatically not an A+ setup, right? It's a B or a C setup, just by default, if you don't have full market participation, because we can't trust that the movement is going to sustain if we're pushing into pivots in other markets and we have, right, like, it just doesn't make sense. We want to see like a very clear shift and break on multiple indexes at the same time, because then we have everything pulling in the same direction, which makes the move much more confident, the sell much more confident. So just like something to think about with like when we talk about like what's your A+ setup, is like if you're trading a divergent market that's pushing down, like you can do it, right? But it's automatically just a worse setup. You can still make money with a worse setup, but it's something to always think about. Again, like yes, great trade from the highs in the rotation through.
593.
And now we're watching to see if this buyer here on footprint, you see him, is going to get absorbed into POC to value of our previous candle. If this can hold on our retest, this could be a really nice continuation trade down.
And oil rigs 455, 455.
It's the same thing on NQ here, but just at a different point, where if we hold POC to value of our previous candle, then this guy is going to remain off sides and will rotate back down to 40 to 50 here. But if they fail to sustain, then we should expect that this still needs to come up further and that we're not ready yet. Again, I'm not looking for a real good short continuation until we see acceptance below value on NQ with Russell follow through. We should just expect that this is still just buy side value. Again, there we have a offside participant outside, that was able to hold. We got a really nice reoffer and rotation through, but this market's just not ready yet on NQ for that follow through. And because NQ is still in this range, we can't expect a ton of participation on ES with Russell still holding and NQ still holding, right? Because they share assets, right? This isn't like one sector. So like if NQ is still within value, then like all of tech is still bouncing, then it's gonna be very hard for ES to get the movement it needs. And if Russell's still holding, that means that financials and energy names are still maintaining, right? So like if these are both bidding, that means tech, energy, and regional finances and healthcare, right, are still decently neutral. So that's where what I mean when I say like we want full participation, because then everything is an agreement that like the sell makes sense and has validity. And again, like you can still make money in a divergent move, it's just less confident. ES stops below 797, really bad bottom on ES TPO chart. I guess they call it market profile chart, TPO. Yeah, that's your time price opportunity. It's very different than it's part of AMT, but it is
This is
a
further
different way
adding
of
from
looking at the
the
market.
headline that we had. The Houthi forces targeted the port of Al Mokka with a missile, according to Tasnim News. Fars News reporting that Yemeni sources said that Yemeni army Ansar Allah, or Houthis, launched a missile attack on the port of Al Mokka in Taiz province against Saudi-backed mercenary positions.
NQ daily POC shifting down here to the slower node. ES POC shifted already, holding at that 803. NQ POC shifting down here to the 60 level. So there's that fake out that we talked about because Russell is holding VWAP, NQ is holding our range, right? So we're coming back up to our accepted value highs now on NQ because we never shifted our range. So that ES rotation, like as we said, is way less confident because everything else is still maintaining. So what's happening there is they're pricing in that sell way earlier than NQ and ES. So the potential to trap is just exponential because of that rotation.
So now just getting wider notation now. Yemen Houthis run agency Sabah, citing military sources saying group attacked Saudi Aramco's Najran facility with drone.
We need to
This
see
is a little bit more now, a little bit more detail again from Yemen Houthis run agency Sabah, citing military sources saying group attacked Saudi Aramco's Najran facility with drone.
This is
We had
incredibly.
the earlier headline not
shut
too
up.
long ago, the Houthi missile attack on Saudi-backed military positions in southwestern Yemen. Quantifies news, and this is just a new headline now here from Sabah News.
This is an incredibly important area because now we're gonna have the market
Just keeping an eye
coming
on
into
oil.
sync.
Tiny move to the upside, not really much of a reaction to that headline.
Watch as we come back into our perceived value because this is NQ then coming into resistance at 90, Russell coming into resistance here at 70, and ES coming into our known seller here and our pivot at 803. So if they all reject and lose momentum at the same time, then we have a market that then can sell together. If not, right, this is going to be ES recovering our lows, and then it has the entire range it can traverse with this liquidity off sides. And then NQ POC has shifted down here on the daily, right? Where we'd be looking for a higher low where we sustain this node, and then we would be able to rotate out after showing no interest below. So it's an incredibly important pivot to see what the overall market reaction is going to be as we push into our edges on all three surfaces. Later, Ty. Have a good weekend, man.
Trump speaking to reporters at JBA, just touting the stock market. This is him speaking to the press before boarding Air Force One. Well, you might be able to find a video or pop it up if we do. It's probably going to be short, but we'll see if we can get a video quickly. So we do have a video of Trump. We'll pop it on the feed for you. The audio is very bad. It's a bit hard to hear him, but you can hear him. Trump on Abraham Lincoln carrier says that the ship is moving. Well, this is just a replacement of another aircraft carrier. That concludes comments from Trump. So reminder, Trump is going to be in New York at the David S. Mack Center for Training and Intelligence in the Garden City. And he's going to be delivering remarks there. Trump just saying that the economy is doing unbelievably. So this is just comments that are just kind of coming through here and there now.
Buyer off sides at 75.80 on NQ. ES buyer off sides into 803. Offer holding across all three at the same time into our highs. Let's see what they do here. If we get continuation or if something shifts, just like we talked about, where we now have a loss of momentum across the board at the same area. We still need NQ to flip and Russell to flip, but if there's a loss of momentum into our top of range, right, that then gives all of this room back down to our lows for ES to then have more room to the downside, right, for that follow through. We're watching. Failure to shift above. You can see where a buy side is trying and failing so far, getting absorbed into these highs. Need to very clearly shift back above that 70 and bid for that rotation back up into 100s, or we will continue to take in size in the mid, right? So we've trapped into highs, and now you're seeing sell side try to trap into the mid of our range. So if they're able to hold this downtrend, right? That's that downtrend. We're still watching for that shift below, but they're now trying to shift the auction, just like we talked about before, where they think that this is an acceptable price to now short, right? To sell, and that we don't need to come back up to these highs. That's what they're trying to tell us right now. Passive sellers are trying to step in and absorb market buys here. So they think that this is a great price to sell and that we're going to come down further. Buyers are trying to punish them right now and push price above this to rotate us back up, because then we would have sellers offside in the mid of our range instead of just at the highs, right? So we're watching to see this relationship play out. And that's how we get movement outside of balance, right? Is that we have participants who are actively stepping over the spread to try to push us out of a distribution or a accepted auction, and they auction at an area that is just very clearly like the wrong place, right? Like if they fail, then they're offsides in the mid, and then they can be punished, which then creates movement, right? Because it creates a liquidity event, or an event where fresh liquidity or a fresh catalyst enters and then gives us room to then seek a different price, because these guys are then trying to force something, right? So we're just watching to see who's going to be offsides, right? If sell side wins, then these buyers are offsides in the mid, and then they've successfully defended, and we'll look for that push below. If buy side wins, right, then this is going to be offside sellers in the mid, and then we look for that push over our highs, and then that's a really great catalyst. So we're just watching to see who wins this auction right at the end. But that's how you have to start like looking at things, is you frame it around the understanding of where accepted, right, prices, right, where value is being perceived at our edges, and where are people trying to shift value. And then that shift of value creates trading opportunities, because those are catalysts. Those are potential catalysts. Something to realize or remember if you're new to the stream, or if you're still haven't wrapped your head around it, is that you have morning volatility, right? Which is where our best trading occurs, which is from our 9:30 to 11:30. And for me, I even slim it down even more, right? 10 to 11:30 usually, like about an hour and a half of like really solid trading, where I try to get most of my trading done in the moves that I'm looking for, because it has the most volume and the most potential to actually do the things that we want in the time frame that we want, right? Because of the volatility and volume that is there in the morning auctions, with all of the catalysts. And then midday, you have a petering off event where volume really starts to slow down, and there aren't a lot of catalysts midday, and it's what we would call lunch, right? And if your expectations are for large catalyst-based moves and continuation, that feels good, right? It feels like the morning activity, that most of the time you aren't going to get that, right? Most of the time you're wrong. It's usually just either flat or a continuation in the direction that we were already trading, at a much slower pace, and you have to be much more patient. And then after 2, you usually get a second auction that takes place, and that can be, your 2 to 4 can be a different trading period, but you should limit your expectations, I should say, into midday, and realize that moves aren't going to happen, right? Balance usually persists, or it's going to be very choppy. And so if you continue to try to trade the same way that you were in the morning, you're going to set yourself up for failure, because your expectations are too high, your stops are going to be too tight, right? You're going to be over leveraged, and you're going to be, on the wrong side of the balance trade over and over and over again, because you're looking for, a breakout to occur, instead of trading the auction that is already shown to you as the accepted range, right? And I think that's where most people fail, is that they don't shift their expectations, and they don't accept the reality of the distribution, right? They don't accept that this is fair value right now, and that we are, trading in between 2 price points. Like on NQ, we've accepted that this is the reality. We've known that this is the range in which we're trading since 11 o'clock, right? We identified it. And so until we see acceptance outside of it, we have to be rational, right? We have to be like, okay, this is where we need to be risking off our position. This is where we expect bids to occur. And until we see that shift below, this is the accepted price reality, right? We don't want to be shorting the lows. We don't want to be longing the highs until we see acceptance outside of it. We want to be playing the traverse to the other side, right? To the other edge. And then we want to be making sure that we take off risk into that. You can try to leave a runner if you're playing from the other side, but again, until we see full market participation and volume step back in, right, and active participants at our edges outside of our known value, there is no reason to think that the market is going to do something else other than your ego, right? So there, you can anticipate, right, but you do not, you can speculate, right, of where we potentially could go, but you need to have a arm and a trigger for when that becomes a reality, and not just like, lines on a chart. So I really want to make sure, again, that you define your areas, right? You define your risk, you define what needs to happen for moves to occur, and then you wait for that to actually play out. And you know that you're better off just avoiding lunch, because you know that there isn't a lot that happens during that period, and then come back for that afternoon for the better opportunity. Right. So again, I would highly recommend that you shift your windows of when you're looking to trade to, the first hour or 2 of the morning, take a lunch, do whatever you need to do, and then come back for the afternoon session if you do want to continue to trade. And then you'll have a much better time where you haven't given back all of your gains midday, and then you can come back in for another opportunity. But like, if you didn't make money in the morning, you're not going to make money in the midday. Like, I'm just telling you right now. And you're not going to make up for the money you lost midday, in the morning. If you start to just like overtrade midday, you're going to blow up your account, because you're now looking and trying to chase moves that don't exist with once the as like volatility has dissipated. So like, again, like, we're trading within our parameters and nothing has shifted from the way that we've explained the auction. And until we see that shift occur where NQ and RTY are outside of these ranges, we know that like ES is just not worth it. Your expectations have to be limited, even though we're holding that edge and there's an acceptance below, right? Like, NQ is still trading within our reality, right? It's still trading within the accepted range, and same thing with Russell. So it's just the follow through aspect has to be, you just have to limit your expectations because we don't have the throughput you would need. That being said, you know, and ES looks pretty bearish, right, with where we held into our 803. And if NQ can continue to maintain here at our 65 to 75 where we're absorbing, then we could get that shift downwards, with Russell also then having all of that room back down to the floor, right, from the ceiling that we're currently trading at. Right, that gives us an opportunity if we can see these guys midday that we were talking about continue to take in size at a lower price point. But we still need that shift below for the follow through. But again, like, it is just this midday auction that is very slow and choppy, right? NQ is doing this to punish you, to make you feel like you can't win, right? It's that midday auction that just chops you up. And in reality, right, it's just the random walk of price between our accepted value that creates our distribution, right? So as soon as you realize that, you know to then avoid this area. You know not to trade it because you know what it is. It's the random walk, right? It's price not knowing what to do within our accepted value. So that means that you should only be looking for trades and executions at our edges, right? Because you know that this is garbage price action. It's just something to think about, right? Like, you know, some of you guys get really impatient and you oversize, you over leverage chasing things. And there's no need to chase when we've like developed out our entire plan and what could happen and where it's going to happen, right? Just wait for those areas. Everything else is just garbage in between. We already know that.
So some further detail in regards to Yemen armed forces targeting Aramco facility in Najran. The military source speaking to Sabah said that the armed forces targeted Aramco in Najran with a drone, which was in response to the violation of Yemeni sovereignty by Saudi enemy warplanes and their intrusion into the airspace northeast of Sadr.
Oh man, it deleted all my shit again. Why does it do that? Oh man, that sucks. I would not be long this with SIG's money below ES 797 maybe. I think you can play the short side on ES until RTY gets back down to VWAP. That's what I'm trying to like get at, is like you have an oscillator right now where RTY is giving you your legs that you can run with on ES and NQ, right? When we have full participation, right, then the market gets its spike up. So if we like look at where this spacing was occurring at 1, it's like this is our short bounce here on RTY and on ES. And if we go and look at it at 1 here on NQ as well, right, this allowed for this push up, right, that relief bounce. So as we come back down again,
4.6 model in GitHub Copilot
into these highs, this is the rotation down, right? So what we need to see is a push below our mid and then a rotation back down here. And then you can look for another bid. But right now, like you have a sell bias into highs until we flip above this, and you just treat this as an oscillator into VWAP. And that allows you to have lower lows on ES, right? Because we have trend and we're just playing around it as a pivot. But you then look for your rotational trades of where price should find resistance, right? With Russell losing momentum and the market losing momentum into these highs. And then that allows you to know where you're risking, right? Because we don't have the full support, right? So then the sell makes a lot more sense if the rest of RTY is also going to sell. Is it still neutral? Yes, but now we have RTY and ES both out of pivot and both trying to sell at the same time. So it gives you better pressure to downside, which allows for smoother movement, faster movement on ES, right? It doesn't have to chop sideways. You get actual sweeps to start to step in. The thing that I wouldn't be trading is NQ unless you're already in from the highs, because if there's no desire down here, then ES can come down to this. But if like NQ continues to just hold here and we come down into this low, and then ES finds like an actual bid to step up, this shit's getting squeezed because RTY is still sideways. So what we would then do is we would just come back down to Russell VWAP as ES comes into our target and NQ still stabilized here. And then all of the markets would get a bid at the same time. So then you would have all three buying at the same time. And then this just like really slow passive sell that's happening is going to get absolute steamrolled right out of the way. So that's kind of what I'm watching for, is what happens as everything kind of comes down into our areas of interest, right? This is just like a very clear shift down to our previous value off of this failure, right? We're just like slow rotating down, seeking value off of the failure to get back in here, while NQ is still just stabilized and we're waiting for a directional decision to be made at this distribution that's forming, right? And if, again, like if sellers fail to shift value down and get below this after auctioning the mid, and we continue to maintain this low, and then we punish them, like these guys are then all offsides. And then we really start to go up. So it's really important that we see NQ flip this before ES gets down here, because if they're still sustaining in this range, the upside potential is much higher than the downside continuation, in my opinion, with where everything would then bid at right at the same area, right? That would give you a lot more momentum when all stocks start to, you know, get that relief bounce at that same time across all markets. So that's kind of like my opinion. And again, I don't short slow markets and I don't short diverging markets unless something like really stands out. So for me, it just makes it an not tradable. It's just a waiting game, because I know the potential for to be on the wrong side of this is so high once volume and volatility step back in. As long as you have like a tight stop though, and you're respecting your structure, I don't think it's wrong to be trading ES or NQ for the short side, but just know like you will know you're wrong very quickly when price starts to accept back above that last seller, right? And then you have to expect that we will traverse to the other side of the range. Like it just is what it is. And it's your job to either maintain, you know, a tight stop, understanding that if that guy, you know, dips out at the mid of our auction here on NQ, that we will rotate up, and you are now, you know, short from 70, and you're potentially have 30 points of offsides potential back to our last seller, right? Like you would have to either be willing to hold through and your risk would have to be above this guy and you're now auctioning at the mid, or you have to wait for an edge first before you can really do anything. So you either have to be like really tight above like these highs, and then you're risking, you know, 7 points, or your stop would have to be, you know, above these highs. It's either one. But if you stay in this position and we pop above this this guy, like understand that we will rotate back up to the accepted value high. It just is what it is. And I think that's where most people fail, is that they buy the mid and then they don't have a tight stop, and then they allow it to run all the way to the top, and then they close their position because they're offsides 30 points because they executed in the middle of the range, and then they stop out, and then price goes back down because it's still the accepted structure, right? Nothing has changed, right? Like you'll stop out up into these highs even though this is where the seller is because you executed here. And like we haven't invalidated the structure, you just had a really bad execution, right? You executed in the mid and you didn't understand that your risk was this entire area. So you either have to have a very tight stop with a clear execution window of what you're looking for, or your structural level has to be your stop and you have to then size according to your structure, right? You have two opportunities, two different conditionals. And I think I see most people do the opposite, which is they FOMO, right? They think they're missing out, that we're not going to come back up to that edge high. They execute the mid, and then they don't stop out at the correct spot when their trade idea invalidates. And then they stop out at top of structure where the actual entry was. And then they've lost money in a winning trade. Do you execute from the edge, or do you wait for confirmation when price moves a bit in your direction? It depends. I try to execute from an edge on a secondary move. So what I'll like in this scenario, for example, where we looked into an area, what I look for is this. I have a zone where I'm watching for someone to get taken in. So size to push into. And then I look to see if there's a order flow layer that I can then execute off of. So I'm looking for them to get absorbed in here. So I'm looking for positive deltas to really start to form here as we're pushing. So like lots of effort, but not a lot of movement. And then what I'm watching for is our look back below. And then I look for a reoffer of our range. And then I play this as my risk. Right, I play that zone as my risk of where that absorption occurred, and then I look for that transition through. So my primary is always going to be, I'm looking to arm. It's a conditional, right? My catalyst is this trap trader. My entry and my execution is the secondary seller who steps in for the rotation through the range to the other side, right? So I'm looking to play off of that as our catalyst. It's the order flow layer. So I might take an initial entry here on first touch, but I would never put full size on in first touch because that's not what's going to give me real movement. So maybe I pyramid into a position. It just depends on
Like, what am I willing to lose, right? And what is it worth the risk of initial touch or not? So like if I'm averaging into a position, like sometimes I don't give a shit. It doesn't matter because I know that structurally where we're holding makes sense and it's important. So I'll start to average into a position and then add more size as long as that structure is continuing to maintain, right? So like here's a good example of that. Like this was our trade.
Index extending drop to lowest intraday since December 30th.
Sorry, 1 second. This is our trade from earlier today, right? Trying to think of where I can do this. So here's your full rotation down on Russell, by the way, with our loss of momentum in the market, just like we talked about. Watch as we push down into VWAP. So these are my entries from earlier, Maker. They're not perfect at all. Fuck, how do I do this, man? We'll do it on a different layer. Right, like I have a zone where I'm willing to put risk on. My stop sat up here above our 125s where this guy was caught off sides on our first test. And it was the flip of these sellers, right? So we caught buyers off sides and it's where sellers were being absorbed before. So it's this shift down that I care about, which was this push and then this pull where buy side got trapped. And then we saw a sweep below. And now this area to me is of interest. And I'm willing to execute as long as we're maintaining these guys off sides, because I see with my eyeballs, right, this absorption that's occurring, these buyers, which are these blue deltas, which is a lot of effort into the highs, just getting taken in passively. So I'm willing to execute and start to build my position because I expect that as long as this area is holding and we're maintaining and these guys continue to get absorbed, that I can build my position. So I'm buying in lots of 5 here on MNQ. And once we then look back above and I see that absorption occur again, I then add to that position. And now I'm then risking off as we push down into our targets, right? So it's not perfect execution and it's not, quote unquote, an edge. I mean, I want you to realize that this is a 30-second chart. So it really is the edge if you're on any other time frame. But from my perspective, I'm watching it on such a small time frame because I have a zone, which is the edge, on the 15 minute, on the 5 minute. This would be the edge. But I have now created a window for myself on the smaller time frame of looking where I want to see this order flow occur that gives me my trade idea for the follow through, right? So I'm not playing the primary leg. I'm looking for the secondary reaction where they then defend that sweep to the downside and then this guy's off sides, right? Like that's the whole premise of the idea. Is like, as long as this guy remains off sides, this is my stop, this is my window for execution, and now I can then look to then get that secondary leg down to our target. Does that make sense? So like, I'm not as, sometimes I'm really accurate and I get like the best possible price, but most of the times I'm just sizing and positioning based off of the structure that I'm trading around. So if my total willingness to lose is $1,000 a trade, and I then have $1,000 in a zone that I can then build a position around. So sometimes that's, one contract if we have a large area of risk, right? A large point of, if it's a huge area, a huge zone, right? Then my stop has to be according to that. So like, maybe it's only one contract then. If our zone of, our structure that we're trading around is 40 points or something like that. But if we're trading around a 10-point structure or a 20-point structure, I can scale more into that position size-wise because our risk is much tighter. So I just make that how I position is like, how many contracts can I scale in? My risk stays consistent then, but my size can then differ based off of the structure that I'm trading around. So it's a structural invalidation, and it's not I'm then not limited to stop out just because my RR went against me, right? That would be the worst thing is like, oh, I had a standardized 10-point stop, but the trade never invalidated. Well, it's like, okay, well, you're just like losing money to lose money, right? Like nothing invalidated. You just had a shit entry and you risked too much. You're over leveraged. Like that didn't mean the trade invalidated. It just means that you were oversized for the position or for the trade structure you were looking for, which is something that's very fixable. So we want to avoid that. So we build our position based off of our invalidation structure. And then anything that, sustains it and it's holding is fine, because that's what we were willing to risk from the start when we put the position on. You feel me? It's like, it's one of the most important concepts you can learn, because that's like the difference between a beginner trader and someone who's been doing it for a while, is that you're losers, you're sizing way too big, right? Because you don't want to lose, and you're unwilling to lose to be down money, right? You're unwilling to have that loss in your book, and you have this weird mentality where you think that you have to win every trade to be successful and to be good at this. And it's like, no, like losing is part of it. Like you are going to lose, right? Like it's statistically, you are going to lose, and you need to be prepared for it, and you need to be sized for it. And so, right, like if you're trading a strategy that has a 40% win rate, you have to have an expectation that you're going to lose multiple trades in a row. And if you aren't sized accordingly for your expected win rate, you will blow up your account, right? Like that's just, it is statistically inevitable, right? That's called the risk of ruin. So you need to be sizing for your account, and then you then build your size based off of your max loss. And then again, like we're trading a mechanical setup. So we understand like what our win rate is. We understand what we're looking for, our expectations, right? We understand where our profit target is. We understand a lot of this because we structurally have set up our trades in advance, right? We have all of this planned out on chart. And so we understand what our expectations are and where we stop and when we're invalidated, and we've accepted that risk. Again, like the problem for most people that are new is that, and it's something that you don't realize for a very long time, is that you probably already know your edge, right? You already know what works, and you have a working strategy. The issue is that you trade dog shit in between your winning strategy because you're impatient, right? So it's actually ruining your winning strategy. It's ruining your edge because of your impatience, your unwillingness to wait, to compound, to grow the account slower than you want. And so you're over leveraging, you're adding to positions that don't make any sense, you're taking discretionary trades that are noise.
6% the most intraday since June 5th.
Right. And then you continue to not realize that like the trades that are working for you, you knew what was going on. The trades that aren't are the ones that just like, you're just bored, right? And until you cut that stuff out and are willing to like slow down the growth, right? You're not going to make $1 million day one. But if you can slow down and only trade the things that make sense to you and have been, rationalized, all of a sudden money becomes a much more like your ability to make money like increases tenfold, right? Because you've cut out all of the noise. It's just the willingness to slow down and to, slowly compound and be consistent. That's hard for a lot of people in the beginning, because your expectations are so high and your greed gets in the way, right? You don't trust the process. How do you get your levels of reversal? It's just volume profile, man. Right? It's just where price is accepted. So it's just our value high and low off of a fixed range, right? Where we created a distribution. And it's shown where there's been interest and where there hasn't. And until we shift outside of it, right? It's the accepted range. It's hard till they blow up a few times. Yeah, I mean, you can tell people the same thing over and over again, but until it happens to them and they start to take it seriously because they have to, right? When they become desperate and they're like, oh shit, I actually have to like get it together, right? Like that's when real change happens, when you're forced to do it. It's hard to make real consequential, right, change in your life until you actually have to, right? You're forced to do it, right? You don't like, most people are unwilling to start dieting or to shift their habits or to stop smoking, right? Until it's absolutely necessary, right? You're not willing to change your behavior until your girlfriend threatens to leave you, et cetera, right? Until there's some sort of like real consequence or real thing that's now hampering you. Most people are unwilling to actually do the work before that and be like, oh, you know what, I want to actually, you know, make this change for the better. And I see that, you know, most people don't want to be vulnerable. And so you're only vulnerable when you're absolutely required to. Full rotation on NQ again off of our known levels, known area. Same thing with Russell bouncing VWAP, just like we talked about. Potential to get squeezed on ES is exactly what we talked about. RTY came down into our lows, NQ came down to our lows. We had two markets moving together at the bottom of their oscillation, and then ES got absolutely fucked. Rotating back up to our seller now at 803. We'll watch to see if they continue to maintain, or if we flip this. NQ into our top of our rotation now into 90s. We'll watch to see if we lose momentum here or if we are able to shift above our structure for continuation. Again, what we'd be looking for is exactly what we have on the 15-minute, which is a look into this area, a failure from buyers to sustain, a look back down, and then reoffer, just like we did here, right? A look in, failure to sustain, rotation, retest, rotation down, traverse through our range. We can see where that order flow is coming in on our footprint. I do not plan on being here for the entire session, so I'm going to be leaving soon. I just stayed because there was actually people willing to ask questions and interact. But I do not like trading the afternoons at all. So I'll stay for a little bit longer, but not too much. But we could just keep pushing higher. Yeah, for sure. That's what I have written on chart, right? Like if there's no interest below, we'll rotate back up. When you first started futures and when you journaled, what did you notice you were struggling with execution wise? I think for me, it's just impatience sometimes. Yeah, no, it's the same thing. So first of all, I started on options, and then I only transitioned to futures a few years ago, maybe like 3 years ago. But I was a options trader before that. And then we transitioned over to futures because I was already just trading SPX and you know, like SPY, QQQQ, etc. And we were trading intraday scalping. And it just like didn't make sense to be trading options when futures just offers the same kind of leverage, and more people were able to access that with prop firms. So I had already a pretty clear understanding of what I was doing and my risk to reward and compounding and all of that, because I was an options trader for many years before that. But regardless, right, my expectations and my risk had to shift, because with options, you're, for the most part, I mean, it depends on what you're trading, but your risk is limited, right? So with futures, your risk is not limited. You can get liquidated. So my invalidations and my time frames and what I was looking for had to be immediate, which made me start to really focus in on order flow. Because without it, I was watching areas of interest. Like with options, like I'll take a trade into lows and I'll look for like you know, a reversion, and it's like, oh, okay, as long as this area is holding, I'm good. Like, well, I can expect this move to happen over time. But with futures, like I'm not willing to risk a position open overnight most days unless I'm up, you know, 500 points already, because the potential for it to come back on me while I'm not there is incredibly high. And that's very scary to me, is to like get liquidated and have no ability to, you know, no control over the situation. Whereas like with options, I know my set risk, right? I have a limited risk. I have floor and ceiling of what my expectations are. And so I'm willing to hold overnight because it's set in stone and it doesn't shift. Either, you know, this position wins or it doesn't. And with futures, again, like I could get liquidated overnight if there's a large move. Maybe my stops don't get hit because it's so illiquid in the Globex session, or, you know, like so many things could happen. And so my execution had to get much better, and my understanding of order flow and what I was looking for, and the areas or the times which I was looking to trade shifted. So before with options, I was willing to, you know, put on positions throughout the day, or I'd be scalping, you know, just the volatility on the contract itself. And I didn't really care about the movement. I was just buying and selling the supply and demand of the individual contract. With futures, where I'm looking to execute became much more important, because again, I don't want to have risk on in an environment where I have where my risk is so high, right? Like it isn't limited, unlike a option. And so if I have a position on, that is risk on in the market. So I want to limit my exposure, is the word I'm looking for, sorry, my exposure to very clear areas where I have the highest probability of winning, right? The highest probability of the move happening as quickly as possible. So I had to change my execution windows because I noticed that I started to lose a lot more midday, right, when the market slowed down. So like from journaling, I've talked about this before, of course, but like you'll start to see like, oh, most of my winning is concentrated, you know, in the first 2 hours of the day. Most of my winning is concentrated in the last hour of the day. Like most of my losing is midday. Most of my period where I'm net neutral or negative is midday. So I can cut out that period, right? And then all of a sudden my overall net return goes up quite a bit because I've cut out all of the shit trades that I was doing, right? And I've now am just holding the periods where I excel. You feel me? So like a lot of the things that I was failing on was impatience, right? The trading periods where I thought that I had to always be in a trade or always have an idea of what we were going to do, and I had to be in every rotation, and I tried to capture every rotation, and I had the same expectations at every single point of the day. And when I started to really excel was when I shifted that from, hey, this is where I do best, this is where my strategy works the best, I've now back tested it. I found out what works, what doesn't, what are the catalysts that, you know, make this, make me more confident. What am I looking for? What am I willing to lose? What feels okay, right? Like what keeps me sane and isn't going to put me in a emotionally reckless state and keeps me grounded. Like, let me trade that system. Those are the things that helped me the most, is just like staying consistent and rational, because everyone feels good when they're having a winning week. But when you have, you know, a losing day or a couple losing days in a row, you start to emotionally loosen up, right? Your rules. You start to be inconsistent. You start to do things to try to make up for it. So like my what journaling did for me was find those boundaries of where I start to get emotionally reckless and make poor decisions and start to over leverage and, you know, make mistakes and make them my my defaults, right? Of like, so I never get to that place. I'm always in a place where I'm never in a position where I could potentially lose everything, right? I always have the ability to make up money and to recover my losses, because the size in which I'm trading is so much smaller than my overall account value. So at this point, it would be impossible to blow up my account with the size and risk that I'm trading, because my win rate, how do I word this? My risk to a ruin is zero.
Pressure, so there are more tools at our disposal.
As long as I'm following my playbook, right? So
Scary White House Press Secretary Levitt speaking to reporters.
My stress went down quite a bit, because now it's not about, you know, like potentially blowing up or potentially doing this. I know that objectively,
and Levitt says the US can continue to punish Iran and cripple its economy.
Right, I know objectively that there's a 0% chance that with my strategy that I'm running and the size that I'm trading, that it is impossible probability, or like statistically, for me to blow up, that I can make up for any losses, and that my strategy outperforms over time. And as long as I'm consistent, I will make money, right? Like that was a huge change for me once I realized, like, oh, that's literally all it takes, is just like patience, right? Again, like this is your risk to ruin, right? So if you have a 50% win rate, you need to expect that you will lose 4 trades in a row. And if you can't survive that drawdown based off of the leverage that you're trading, you are going to blow up, right? So you need to know what your strategy's win rate is, what kind of consistency you have. Are you taking trades that make sense? And what's the expectation? Because if you're trading random garbage and random size, and you can't account for losing, you know, 7 trades in a row, then you have a 100% chance of blowing up. So if you're leveraging 20% of your account's value, right, on every trade, and your win rate is only 50%, right, you have a pretty high likelihood to blow up your account over time. So what you need to do as your journal is you figure out what your MAE is, your MFE is, what your average drawdown is, right? Your positive excursion, your negative excursion per trade, and you figure out like what you're actually able to risk with your strategy, and you build it around that. That then creates a profitable strategy, because you know that as long as you are trading this system, what the overall win rate is, what your expected loss is, what's within the criteria, right, of your strategy, what your expectations need to be, right? Even on a winning strategy that has a 70% win rate, you will lose 2 trades in a row eventually. It just is what it is, right? You have to expect that. And you can't tilt because you lost 3 trades in a row. If you lost 3 trades in a row that met your strategy, right, met your playbook, it is what it is. It's just part of it. Statistically, it was going to happen. So you can't tilt off of that once you realize, like, oh yeah, this is an accepted loss within my strategy. I know that I won't win every time. And as soon as you like remove the ego and you're mechanical with understanding that like some stuff loses, it's okay. You can't control every aspect. Things really start to shift for you, because now it's not a game of, you know, like if I lose, my self-worth is on the line. It's like, no, like it is what it is. It happens. I can't control every aspect. I have to be prepared for the bad days. I can't only be okay on the good days, and when bad days happen, I full on explode and lose my shit, and I can't be an adult, right? Like you have to account for it. So your strategy has to be built around potentially losing 5, 10, 100 trades in a row, right? You have to trade your size based off of your strategy. That shift is like one of the biggest things you can do for yourself. Again, this is something that I've shown, but like, this isn't an automated strategy that I'm working on right now, right? And it takes trades, and it has like a 30% win rate. Like, my expectation is that I can lose 10 trades in a row on this and be okay. So like, here, I'll show this real quick, because I think this is something that's very interesting that you need to be able to see, is that I'm sizing for my risk, for my win rate. I am okay losing this many trades in a row, because I know that I can lose, what is this, 10 trades in a row? That 1, 2, 3, 4 trades recovers my losses with my risk to reward. I can lose 10 trades in a row, and 4 trades make up for my losses. And so my curve overall is to the upside with a 30% win rate, because I'm controlling my risk. Do you get me? So it's all about sizing for your risk to ruin for your strategy. And then having a positive equity curve is just your risk to reward for your win rate. And then it's just being okay to lose sometimes. It's okay. It's part of your strategy. It's bound to happen. You need to accept it. Those changes are the biggest changes, club. As soon as you accept that reality, and then you just trade what you know, and within the parameters that you've set for yourself, right? And then you just consistently do that on a daily basis, things are okay. It's when you try to be too ambitious and you lose the plot, right? When you try to shift things when you have one bad day. Like, imagine if I changed my strategy and I was like, oh, I got to find something else. Oh, like I was winning all this time, and then I lost 3 days in a row, or I lost 4 trades in a row. Now I got to find a new system. I've got to move on to the new thing. It's like, no, bro, like, you're going to have periods of drawdown. It is what it is. It's every system has it. Right? Like, oh, I got to move on to ICT now. Oh, I got to move over to this new concept. No, like, it's just, you have to be consistent with what you're doing. Consistency is going to pay out in the long run. Like, here, we can look at 365 days so that you know that this isn't a one-off. So this was just the last, I don't know. Like, this is what it looks like over time. Right? We have losing months, but our losing months are not extreme, right? We don't have drawdown that isn't within the structure of the account size that we're trading. 30% win rate with a 1.5% profit factor, and our equity curve is to the up and to the right. Right? So imagine what you can do if you have a 60% win rate or a 50 and you're trading a similar profit factor. This shit goes crazy. Does that make sense? Like, these are like tough realities that like you don't want to deal with, and they seem very counterintuitive in the beginning, because you have this like rationale that you have to be the best and you have to win always, or your self-worth is on the line, and you have to make this amount of money because you're comparing yourself to others, right? And it's like, no, you just need to be fucking consistent, and you have to just follow your rules and have expectations that make sense, and then just like not size up to a point where it's a YOLO. Like, you have to either treat your account as a YOLO, right? You have to have risk it all and be willing to lose it all, or you need to size correctly for the risk that meets your strategy, right? It's either one. You can't do both. You can't oversize and then still have a tight stop, because then you're just going to slow bleed your account to death, right? It's death by 1,000 paper cuts. It's because when you start to position based off of contracts, the amount of contracts and the amount of leverage that you're trading instead of the actual trade, right? You're doing it in reverse order. Remember, it's what we were talking about before. It's like you need to stop trading a set stop. Well, actually, I guess in the beginning it makes sense to have a set stop, right? When you're first beginning, it's like, oh, okay, I'm willing to, you know, have 10 points of risk. But once you like actually have a playbook and you know what you're doing and you have structural levels that make sense and that you back tested, right? You forward and back tested and you see that they work and they're not just random lines on your chart, then you should be risking based off of your structure, right? That's the only thing that makes sense because that's the only thing that's real. But before that, you just like are drawing random drawings on your chart, and it's like, yeah, okay, well, maybe you shouldn't be trading around your garbage lines, your garbage structure, your you know, you only have like a half understanding of what you're doing. It's like, okay, maybe I should have a set risk to prevent myself from losing too much because I haven't even back tested my actual levels. That makes sense. But once you do, like, you trade around your structure, and that's the only thing that's ever invalidates. And then you size according to your structure, like we talked about. I don't know. Hopefully that answered your question. It looks like we're probably going to get a reversal off of that failure at the lows like we talked about. You have ES accepting back above our daily POC, which is a really important area of interest. I could definitely see if we continue to hold 803 as supportive, a rotation back up to VWAP maybe at 813 off of this failure. All of these guys are now trapped below, just like we talked about. What you want to see is confluence across the market, right? What we know right now is that we're traversing our known range. We're back inside our balance on ES. So our expectations still need to be limited because we're traversing this box now that we've accepted back in. But we have to understand that all of this liquidity below is now offsides, right? They tried to force a market direction without full participation from ES and RTY, which is exactly what we talked about. So now these guys are all fucked. So our expectations are still bound, right? We're still trading within our structure, but we understand, oops, I didn't mean to do that. But we understand that these participants are offsides and that can be a catalyst for a rotation or a breach outside of this range. So again, our expectations need to be limited for the short term. We know that we're trading between this level and this level, which is our value high to our value low of this range. It's the accepted auction, right? But because all of these guys are offsides below, if we are able to hold and show any interest above, this move has a lot more explosive potential for continuation higher because now we have this as a catalyst where these positions can get liquidated, right? What we want to see is full market participation as we push up, right? We have our markets back in sync. ES is testing our top edge, NQ is testing our top edge, Russell is testing our top edge. Do you see how we're no longer diverging? We've corrected the divergence. So now what happens next actually matters. If everything rejects at the same time and we're now pushing down together, right? That's a move that I actually care about because now structurally everything is the same. We would have full participation across the board. And it's the same thing if we do a breakout, right? Where it's like, oh, okay, well, if the market's now all testing and accepting in our structure and we all look up at the same time, right? And our breakout at the same time, then the upside move actually has validity. This is what we care about. We want to be trading markets that have that are synchronized, right? Have confluence because it gives the most the least amount of friction for the move in general. When there's divergence and our markets aren't in sync, right? That creates friction. It creates choppier moves. It creates less confident price action that looks like this, which makes you miserable if you're trying to trade it. So as we come back up into this in the midday, it's going to be a very important area to let us know what we want to do. Are buyers now willing to defend this edge? That's the question on the return back in, right? Because we have basically two options now with what we're looking at. This is going to be a trap off of a failure to sustain above into our balance and break out. And then we trap, and then we go down with full market participation on the move on the downside, right? That trap would be the same thing here on NQ. Or we're going to hold, right, rotate up, and then break out together. And if we have market confluence, this move is going to feel way better once we've actually broken these balances. And that's what you're going to be looking for into end of day. Can I tell you a story? No, man, I'm sorry. I appreciate you though. I'm about to head out. It's late. I only stayed because you guys were interacting. If people don't interact, I usually leave at like 1:32. But I'm glad that you were here. I appreciate you. The next move should happen relatively soon, and you have an understanding of what to be looking for, right? Your expectations and where we're looking for that shift to occur. So I'll post a couple charts in Discord into end of day if we do end up getting the breakout. But like I said before, like if there's no interest below, like it's very clear that this is our low. We just need to watch now to see if we find acceptance outside, or if the market, is now going to continue to find the seller here, and then we move together down. The things that we have that make this move different than the other rotations as we push into end of day is that our POC on the daily has shifted down to this lower node. That's what this line is here. So like if I zoom in and turn off these, you can see that our POC was up here into the highs, right? So we had one singular distribution today for most of the day when we were just oscillating between our two areas of interest, right? While we were above previous day value and just traversing yesterday's value area. What we've done today is incredibly important. We've created a lower node, right? So we now have a double distribution that's forming, and the POC has shifted from our 2 days, from up here into the highs where we rejected. This is our look above and fail area. And we're only bullish for breakout on the push above this, right? Or we'll just expect rotations in between. What we need to do to be bullish for the rest of the session, right, is get back above previous day value low, and then we can rotate this entire node back up to this POC. Right now you have two very clear distributions, right? You have this lower one that we're trading within, right? We've identified. And then you have this upper one that we have to get back into. And then we have this in-between auction, right? That happened here at our node edges. So we have a transition period that we're gonna have to shift through, but if we can get back above previous day value, we know we're gonna rotate back up to 244. If this lower auction continues to maintain, all we're looking for is the failure for this POC to shift as supportive, right? Which is again here at 60s, a look back below, and then this going resistance, and then flipping our value low. We flip our value low, then we'll start to rotate down, and we have zero structure below us, zero. So it'd be a rotation back down to 930 if this continues to fail, right? So like your end objective, I'm deleting these, is to get back into this upper balance and continue to fail to shift below this guy here. If we can do that, right, then we're still maintaining this node, this low volume node, and we don't need to fill it. And then we'll look for acceptance back inside for a rotation up into this structure like this, right? That's the idea end of day, is if this POC can shift down here and we can continue to maintain POC to value low, then we're still within our accepted new balance that we've created, right? This node. And what we're looking for is for this to then push up and build here so that we can rotate up. What that would do is it's going to turn this from a double distribution, right, into a singular distribution if we can fill it. right? This would then become a singular distribution by being able to get back in. That volume, right, would look like this. And then we'd be able to rotate this as a singular node. What does it mean if we fail? Well, if we can't get back above and into this value, then this is acceptance. And what is this then? This is then a bear flag off of a sell side leg. And our failure is a inability to get back above our balance high, right? Or sorry, our low of this session, right? And get back into our value. And then we are looking for a failure, a shift below, and then a rotation back down to previous structure, which would be into here to fill this gap, right? Does that make sense from a structural perspective? Where you have these three
NYMEX
options?
WTI crude September futures settle $82.40 a barrel at $1.15 or 1.42%. NYMEX diesel September futures settle at around $4.28 a gallon. NYMEX gasoline September futures settle at around $3.18 a gallon. And NYMEX natural gas September futures settle at around $2.73.
Do you see what I'm talking about? Where we have an upper distribution, a lower distribution, and then a low volume node where there's nothing, right? It's just air. And then we have this node down here. So we have our plan of what can happen and what needs to happen for this to continue to stay bullish, right? We need to find acceptance back above this area so that we can fill out this node and make it a singular distribution. If we fail to get back above this 124, right, to 160, if this continues to hold as resistance and we then accept below, we will fill this structure back down to 940, 900. It just is, it is a matter of time if there's no interest above. Why do we care about this low down here? Well, because it was the balance high of our multi-day breakout, right? So this would just be us, retesting our larger structure here, right? This is a multi-day value high that we have labeled as the ceiling or the balance high. And it would be our rotation back to this to fix this poor structure we had from the large squeeze we had to the upside. So if there isn't a willingness to sustain this, then we will rotate back down to fix this poor structure and come back down to this very clear edge that we have, right? Does everyone see that? Do you see the structural levels that we need to push through? Do you see the rotation? Upper auction, lower auction, main auction, LVN, right? So in a very bullish auction, we won't have to correct this LVN. We would maintain it. So what you're looking for is instead of this becoming a D, right? And needing to fill out this area here, you're looking for this to become the D, right? A D profile like this. Instead of having to do a larger structural fill, which would look like this as we filled out this structure here, which would be price coming down and trading like this, and then maybe getting back into balance or holding and maintaining, right, this low, and then rotating back up to these highs over and over again, right, building out this range. So we have like a very clear area where we need to push back in and where we want to hold or where we're going to go, right? It's just gravity. right? These are your 3 auction states. You have your neutral, which is yellow. Oops, fuck. Oh man, really? Okay. Right, so you have your neutral auction, which is what we're currently transitioning in, which is a potential bear flag, right, off of the acceptance below yesterday's value and the push down below our ETH low, our Globex low, and we are now building out this node. So that's the current auction that we're trading in right now, is this one right here. This is the transition auction, and we have to be aware of this lower node and this upper node. Right, so you have 3 auctions, 2 distributions on today, and then you had this lower, right, where we did our big breakout. This is us coming back to reality down here. So we need to see if we're going to be able to sustain. If we can get back in, amazing, then we're bullish. If we fail, then this is going to shift downwards. We look for acceptance below our value and for this pivot to hold, and then we would then look for gravity to take effect basically in the market and then rotate us back down to our larger breakout here on our multi-day balance high. So this would be retesting our structure. Just coming back to reality, right? Coming back down, retesting our structure, making sure that this breakout is legit, and fixing this poor structure. So those are our 2 options. This is the overall idea. I think that it's pretty clear. I'm going to post it in chat because I think that this is obvious, but that it's still good to have it as a plan. At least you then have it as a reference. And then I am going to dip out because we are still balanced. You're just waiting for acceptance back outside of value, right? If we continue to maintain these lows, amazing. We're in a great position. If we can shift back above previous day value low in our VWAP, then you have a lot of upside potential, right? We then rotate the known auction, which is previous day value low, POC, value high, right? These become our targets as soon as we're able to shift above and get back in. If this is going to just rotate here, right? It is what it is. You got to wait it out. Okay, I'm out of here. You guys have a good rest of your day. Nothing has changed. Like I said, it's pretty clear, very clear boundaries. Play your boundaries until we see acceptance outside. Once we do, you know where we're headed, right? It's the same thing on ES, the exact same thing. The exact same thing. Here, I'll zoom out so that you can see that. Just so that you have an understanding for both charts if you want to take a screenshot or watch our areas. Let me change to the 5 minutes so that you can see that a bit better. This is our multi-day balance that we broke out of, right? So this is our area of interest. We want to see if we can defend this 85 to 93. If we don't, right, we would expect a rotation back down to 75s on a hold of 85 to 90. 75 is your target. Why is that our target? That is the POC of our larger balance, where we would expect price to go, right, to gravitate towards if this failed on this edge. That is just how it works, right? That is the way that the market works. Remember, this system that we've created for ourselves, or these laws, this framework that we trade within, is all based off of this. right? That's where that POC rests. So that would be our target, because this is where price could either bounce and disrupt the full value rotation. So we need to, that is our magnet of where gravity, right? Where price wants to head back to, because that is the value of a multi-day period, right? So if we failed to sustain this upper move, we would expect that gravity would rotate us back down to it. That's just how it works. You feel me? So we either are going to sustain this breakout and hold, right? And then push up and rotate back up, get back up our battle line, and then do this as our rotation for a continuation higher. Or we're going to have to fix our structure, come back down to our edge here, see if we can sustain and hold, or rotate, fail, come back into a downside magnet, and then figure out directionality. Failure to sustain here, right, would then result in a secondary leg down to 55s. So all it's about is just, can we hold our larger structural edge, and can we get back into value above, right? So this is going to be a great trading opportunity here on the flip back in for this push down. And if we can get back above our look below and fail area and our battle line, this will be a great transition trade for a rotation back up. I think you'll have a couple opportunities here for some really solid trades once we breach out of this structure and show which direction we want to go. I would say that this is probably more likely what we're going to do, which is a retest of this, and then a pop like that. Ooh, that looks bad. Let me redo this. Right, like what you're looking for is a flip of this. All right, let me zoom in. Right, let me take a screenshot of this and then go more micro. Sorry. Okay, why is this just like stuck there on my screen now? Hello? All right, wait, my computer's like, okay, there we go. All right, so you're looking for this, right? This is the auction that we're currently trading in. You're looking to see if we can accept This is now shifted because POC has moved down, just like we talked about. We have this lower node. Control V. We have three nodes just like on NQ, where we have three nodes. We have the accepted value, right? We have the transition node, and then we have our lower node that we've built. So this is our lower node. This is the transition zone. This is our upper value, right? So what we want to do is rotate and hold these guys off sides below, right? Push up, get into this LVN, sustain this, and then rotate through this node to the other side. That then decides our direction. This is a balance in between these two. If we can sustain this, then we would then look for a rotation up like this, right? If this fails, we expect offer to hold, rotate back down, see acceptance below this, rotate into this. Bearish below 85s. Right, that's literally it. We want to get back in and over this area here. Because once we do, we're in that bullish acceptance for this to become a singular node, right? That would be us recovering this edge for that rotation, at least back up to 82. And then if we can get above, then we rotate up to the tail, right? If this fails, then this is us building out this lower node, and then this is our resistance for our rotation down. It's just us fixing structure, right? Okay, that's all I'm doing. That's probably going to be your plan into Monday as well. So that's your weekend plan as well. Of course, I will post an update and go over all of this, but that's your plan in the end of day. Have a good time. Goodbye. Yeah, have a good weekend. Let's I'll maybe post a couple updates in the end of day. I don't know. I'm gonna go walk my dog though. But everything is labeled, everything's on chart. Just watch for market participation, play the direction, and see if we can get the shift back over our battle lines, or if this continues to just maintain. Remember, it's balance until proven otherwise, until you see actual acceptance on either side. All right, peace. Have a good weekend.